issues. Without wasting any time, I would like to welcome our speaker for the day, Mr. Vishal Poddar. Mr. Vishal Poddar is a partner with SS Mota and Company in the tax and assurance practice since 2003 with special focus on indirect taxes for more than 21 years and acts as an advisor to Ashwa Legal LLP. He also holds a diploma in information system audit. He's a faculty officer for GST in National Academy of Customs, Indirect Taxes and Narcotics and is empaneled as a GST trainer by ICAI. He was awarded the Tejas Puraskar 2020 and the National Award for Distinguished GST Trainer 2018. As a token of appreciation, I would like to present you with an e-memento, sir.
Thank you. Thank you. I think you're on mute. Priyanshi, you're on mute.
Without further ado, I would like to request you, sir, to take over the seminar and enlighten us with the topic. Thank you, sir.
Thank you, Priyanshi. Thank you very much. So I welcome all the participants for this series on litigation organized by ACAE and also co-partnered by ID, TPF, STAR and Tax Group. I take this opportunity to thank the organizers and my very good friend Shubham Bhai for according me this beautiful opportunity. Priyanshi, what should be the medium of communication? Because I want the session to be Q&A type. So what will be the most preferred language for everyone so that they can also respond?
Sir, I think it can be a combination of both
In the
Hindi
English?
and English, mostly towards the English side. That's been the
Okay,
pattern in the
fine,
last 3 weeks.
fine. I'll do that. So we'll keep it like this. I'll be asking everything or deliberating everything in English. But if you all are raising any questions or when I'm raising any questions and you are putting any answers, please feel free to respond. Because as we all know, the topic which is allotted to me is the most important and also the most common topic of GST. Whenever you have any series on GST, even if there are 2 sessions or 3 sessions or 12 sessions like ours, definitely there will be a session dedicated to ITC. So that is the case even here. And also in our day-to-day practice, as we see, the most number of notices, the most number of audit paras, the most number of summons, and also the majority number of litigations which have already come, and there are much more yet to come, all are having a major thrust or a major inclination towards ITC. So that is why it is very important that I want that the concepts or the issues which I am going to raise in front of you, I want you all to involve in it so that we can add value to everyone present over here. And that is why I'll request that whoever is present, be comfortable with the language. Language should not be our barrier. I don't know whether you all can unmute yourself, but even if not, let's see if we can do something, Priyanshi, because I want that people should participate in the questions that I'm going to ask because they are going to be of
The
great value
questions
to
can
them.
be posted on the chat box and then accordingly we can, take up the question as and when. If you want me to take it, in the middle of the discussion,
No,
I
no, no,
can.
no. Priyanshi, I have crafted many questions or many issues where
Okay.
I will request members to participate. Obviously, there are questions that maybe we can decide either we can take in between or towards the end.
Okay.
That is fine. But I have covered the entire part into Q&A so that it adds more value to everyone present. So this is where I'll request that if possible, if you can from your end unmute people. So let us do it this way to be more organized that whoever wants to answer may just raise your hand so
Yeah.
that Priyanshi from her end would be unmuting that particular person only, right?
Yes. I'll do that.
Perfect.
Yeah.
Great. So thank you very much once again. Just to take ahead the session, these are my very recent achievements. You can see on the left side of your screen, it is one of my most fastest selling books, which gives ready replies on 44 issues specifically relating to input tax credit. Then on the right hand side, my latest edition is the book which I have co-authored, which is on the gaming industry, which covers everything in gaming industry, whether it is income tax or GST or accounting or auditing. And in the center, you can see I was very recently awarded the National Taxation Award by TIOL This is the India's biggest online forum, which we refer regularly. Fine. To start with, many times when people ask me, Vishal, what do you think GST is? I say, according to me, it is one word. GST, according to me, is Bhagavad Gita. Why? Why do I say GST is Bhagavad Gita? For the simple reason, same like Bhagavad Gita, GST has many aspects. So, for the first thing to say, there are five different types of laws in GST. First, the law which is passed, which is implemented, or something which is in the proposal stage, which is the first type of law. Let us say it is a law by the parliamentarians and the council. Second is the GST law, which is understood by the business. Now, when you are a practitioner and you deal with your day-to-day GST related issues, you'll find that the businessman has a different understanding of his own relating to the GST law. The third is the law that we understand as consultants. The fourth law is a law which the officer wants to impose on us. And above all these laws, the biggest law in GST is the GSTN itself. So I believe we have five different types of GST laws, similar to Bhagavad Gita. Another very interesting aspect about GST, why I consider it as Bhagavad Gita, is because different people have different interpretations on the same point. So today also maybe you'll find this, that on the same issue we may have different opinions, same like we have for Bhagavad Gita. And the second reason why I believe it is Bhagavad Gita, because even the same person may have different views at different points of time. So how I understood GST in 2016 at the draft stage and what I understand in 2024 is very much different for the same point. So this is where I equate GST with Bhagavad Gita. Now, since I've started connecting GST to our own philosophy, our own culture, so let me also connect the issue of ITC to our culture. If GST is body, then ITC is the soul of GST. This is what I believe and understand about GST law, specifically with respect to input tax credit. Now, why I say it is like soul, why it is Atma? Because it is always there, but the realization of it is very difficult, same like Atma. So we all know there is a life in all of us, but to understand that, to realize it is the biggest challenge. And only few have been able to realize the spirit inside all of us. Same is with ITC. It is the soul. It is all pervasive. The entire GST law is based on this. But to understand and to realize this is a big, big challenge. Now, let me take you to all the different issues which I have come across or which has been shared to me with knowledgeable people like you all. Let us try to find out some probable answers, if I may say so, or let us come out with probable alternatives of these various issues. So let me start with the first issue, which is also a question to y'all. So let us say there is a wrong GST which is charged. So I'm a supplier. While raising invoice, I have charged GST which is not correct as per the law. Now the simple question is, see, here we are only limiting ourselves to the discussion from the recipient's point of view, not from the supplier's point of view. So what supplier has to do if he is wrong, we are not talking about that. So let us say I've already issued an invoice. The invoice is wrong. Now who has identified it is wrong? It is your auditor. That is when your GST audit is happening, you are the recipient. Then whoever GST officer comes and when he is auditing, he pinpoints to you that this particular GST which is charged by your supplier is wrong. Now let us say this dates back to 17, 18, 18, 19, 19, 20, for which now rectification 99C, everything is done. So there is no scope even at the end of supplier to maybe rectified, or let us say even if there is a scope, I'm saying we are not getting into that. Now as a recipient, we are only talking about you because this is the common point which I have started coming across facing in past 6 months specifically, that nowadays now 2A, 3B mismatch, all these things have become old, for you have many circulars and relief. So the newer issues that these officers are targeting, this is the first issue. I am sure many of you all would have come across this. Now, what are the reasons where it can be wrong? One, the officer says that the tax levied by the supplier is wrong. Why? Because instead of taking 12%, he has taken 18%. Second, the valuation which supplier has done is wrong. So value is wrong. So automatically, even though the rate is right, the amount of GST is wrong. So first query or first audit para that he has taken in my audit is that he is saying that the supplier's tax charge is wrong. Now the question is, if supplier is charging a tax which is wrong, are you eligible for ITC? But before I answer or before we discuss on that, let me take you to various scenarios. One, wrong rate is charged. Second possibility, supplier has made a wrong classification. Instead of classifying your supply as interstate, which is the correct classification, wrongly he classified as intrastate. Now again, I know there is a provision under the GST law under section 77 of the CGST SGST Act and section 19 of the IGST Act, which deals with that supplier can rectify it. But again, I'm saying everything is happening at your end. You are the recipient today. You are facing all these queries in the audit. Maybe your supplier is traceable or not. Even if he's traceable, he may not be ready to do all the amendments because he does not want to take all that pains. Now the question is how you are going to defend this particular point or whether you are liable to reverse this ITC. So the second reason for the officer claiming that your ITC is wrong is that you are having a wrong classification in terms of interstate intrastate. So it should have been IGST in your invoice, but the supplier has charged C plus S. Third scenario where it can be wrong is that tax is correctly charged by supplier. So now in first two cases, supplier had made some mistake. Now in third scenario, supplier has not made mistake. Everything is correct. Value, rate, classification, everything is correct. So I have correctly charged you IGST. But when you are filing your GSTR 3B at the time of claiming this ITC, this has happened with all of us in the initial years when we were very new to the portal. We were not understanding the portal. At that time, it has happened with many of us that instead of putting that credit in the IGST column, we have wrongly put in the CGST or SGST column. In initial years, many people have done that. Whatever IGST had come, they have bifurcated and put it in both the columns equally. So there are different types of scenarios possible in third case. The third case is where I have correctly charged, I'm the supplier, but while availing in your GSTR 3B, you have put it in the wrong column. And the fourth scenario, which is according to me the most critical one, we are facing a very big issue of 100 crore plus on this one point, that supplier, maybe by mistake, has levied tax on such a supply which is exempt. So there is an exemption notification which covers my supply. I'll give you the example which we are handling. It is the case of a works contract where the works contract service which I supplied to you was falling in one of the exemption entries. I was not aware of that because I was under a wrong impression that no, my supply is not covered in the exemption entry, or maybe as what we normally advise to our clients to be on a conservative side, not to take a risk. Better is let us pay the tax. So I levied the tax. You are also comfortable because you are going to get ITC. So I levied and you took the credit of that particular amount. Now, in all those four scenarios, the bottom line question is in your GST audit, the officer is claiming that the tax which you have taken as credit in first, second, and fourth. In these three cases, supplier was at mistake. He has charged the wrong tax. In the third scenario, supplier charged it correctly, but you took it wrongly in your 3B returns. Now, the question is, are you eligible for this credit? Or in other words, how will you defend this if this comes to you as an audit para or as a show cause allegation? So are you eligible for this credit, which is wrong in the first place? Anybody would like to answer may raise your hand so that Priyanshi may unmute them and then we can take at this point. So you can answer all the scenarios, you can answer any one of them. So the simple question is that something is wrong because of which the credit which you have availed is wrong in one of these four scenarios. Identified by the officer during audit, during any type of scrutiny or whatever. Now you are facing that in your litigation. What will be your response or reply to this? How will you defend? See, don't think about right or wrong. Many times what you think may be a new dimension to that particular issue. So be open. Whatever you feel, you may just post it. Or if you want, we can just unmute you so that we can have a good discussion.
So there's a reply from Mr. Manisha.
Can you please read for me, Priyanshi?
Tax not charged in 1718 as exempted item, but investigation officer is asking tax. Now saying classification error, we are supplier buying from the manufacturer. I think this is a query from his side.
It is a classification issue. So I think I'll not take it here because unnecessary will be diversing. If by chance we get time at the end, we'll keep this question. Priyanshi, you may keep it marked. I will answer this question at the end.
Yes.
But it is not concerning with ITC. So I'll just not transgress my
Dhruva
topic.
Jyoti is raising his hand. I'll just
Please, you may unmute.
Dhruva Jyoti ji, I've asked you to unmute. Please, can you do so?
Yes, ma'am. You may please.
I think
Yeah,
he's not able to unmute.
Mr. Aloke, I've also allowed you. You may also, yeah, please.
Hi, sir. Good evening.
Very good evening.
Sir, basically, our business operation is we are providing a level of service to our several clients. And
I think you're raising your query. I'll request you to please answer the query which I have raised. I don't want the session to get diverted, please. So maybe I can take your query separately, sir.
okay, okay, sir.
Yeah,
Thank
please.
you.
So, sir,
Yes,
there's the answer in the chat box. CA Vijay Nahata ji has written
please,
anonymity
please.
should be allowed as there is no loss to the revenue.
Okay, fine. So this is how you are going to defend Vijayji, that since there is no loss of revenue, it should be allowed. See, you are correct. See, in fact, I'll say as a consultant, we all will take some stand only to defend. But the point is, how will you present this in a reply or when you are contesting this at any level? So let me share with you some of my understanding about this. So let us understand it from the legal perspective because you have to defend it legally. So if I'm facing any issue relating to input tax credit, let me first answer the officer by quoting him the basic definitions. I'll say, sir, what is input tax? The law says it is the credit of input tax. Simple. Now, what is input tax? Now, here comes the most important point. I've marked and highlighted the key points. You should also do the same. When you are sharing this in your replies, you should underline it and then explain the point. So what is the point? When you go to the definition of input tax, it says that in relation to a registered person, it means the central tax, etc., etc. Most important is the word charged on the supply of goods, service, or both made to him. Made to him means made to the recipient. Now, here I would like to identify certain things that if you read the law, even the erstwhile laws, in many places they have used the word leviable. They have used the word chargeable. But here the word is not leviable or chargeable. Here the word is charged. Now, if I go to the English interpretation of this, the difference between chargeable or leviable and charged is that when I say something is chargeable or leviable, it means something which is correctly chargeable. That is what is the meaning of chargeable or leviable. Like if you read the excise law in many places, even in the customs law, you'll find the word duty which is leviable under this section. So when they say leviable or chargeable, it means the correct duty. But here, I believe there is no drafting error. In fact, it is a very intentional point. The law is very clear that I have intentfully decided to put these words in the law where I, as lawmaker, is saying that whatever tax has been charged by the supplier will be input tax. And if you satisfy the conditions of section 16, it will become your input tax credit. So let me also take you to the definition of central tax because you'll get the credit of all these taxes: central tax, state tax, integrated tax. What is central tax? Again, if you read the definition, it is not saying leviable. Go back to excise, go back to customs. Over there, in many places, they have used the word leviable. But here again, in GST, how they have defined these taxes? They say central tax means the tax which is levied. It is not leviable. Again, the difference. Leviable means what is correct. Levied means whatever is done. So whatever is done is what is your central tax. And again, if I go to the section 16, which is the mother section for allowing you credit, again, what it says, again, I'm only reading the highlighted para. It says that the registered person will be entitled to take the credit again of what amount? Of the amount not chargeable. It is the amount which is charged. So if you read all these things connected, nowhere they have used the word chargeable. They could have very well used the word chargeable. It is not that the grammar requires them to use charge. I could have always said chargeable under section 9. I could have always said chargeable on any supply of goods or service. So it is not a grammatical requirement that I should use charge only. So the lawmaker is very clear that when input tax credit eligibility comes, it is always what the supplier has charged. Now, besides this legal interpretation, we have certain case laws. If I can share answer for for scenario 3, there is a important, rather 2 3 case laws we have. The most recent ones are Orient Traders and Sunday Chem, where a similar mistake had happened. What is our scenario 3? That supplier charged correct tax, but you took wrong credit by putting it in the wrong column. The honorable courts have said, as what was pointed out by one of our participants, that when there is no loss of revenue to the government, only some column bifurcation is wrong. In that particular case, the recipient should not be penalized by not allowing the credit. In fact, I'll equate it with that section 77 of CGST SGXT Act, where it says that where supplier has made wrong classification, then supplier is also allowed to make the correction without paying any interest and penalty. It means the lawmakers are clear that once there is a tax paid, even though for some reason there is some mistake, this should not be a punishment to the recipient. The major reason being the recipient has no control over the tax which is charged by the supplier. Please understand this also. So even if there is some mistake, it is the supplier who will be liable to pay the difference of interest, tax, etc. But as a recipient, you cannot be denied the credit. So in the first three scenarios, I believe the matter is very clear, and there are supporting, as I said, legal usage of the language, and also there are few judgments as I already quoted. Now here comes the fourth scenario where I feel that there has to be some precaution that we should take. What is this fourth scenario? The fourth scenario is where the supplier has charged wrongly a tax on an exempt supply. Now here in this case where the supplier is wrongly charging a tax on exempt supply, in this particular case, the point is whether you are eligible for ITC or not. Now, in this scenario, again, if I go back to the original logic, what we discussed, that since you are not at mistake, it is not your fault. And most important point is that you have paid that tax, you have satisfied all conditions of section 16, and the law is also clear that whatever tax is charged, that should be eligible as credit. However, there is a very big challenge. What is that challenge? Firstly, I've quoted a favorable judgment. So wherever you all are stuck up in this, please use this judgment. This is what we are also using. As I said, we are facing a very big issue in this particular matter. So we are using this particular judgment in that. But yes, I know this will be going long way because the demand at our end is 100 crores. So it is going to go a long way. But the point is what? Let me tell you, this particular four scenario has to be taken with some precaution. Why? Because there are conflicting judgments which says that if something is charged, like here in this case where it is exempt and still you have charged, there is a possibility that the honorable court may say that, see, if it was exempt, you are not supposed to charge, and whatever you have charged is not a tax in the first place. So there is a difference between the first three scenario and the fourth scenario. In first three scenario, there was a tax, only there was a mistake in rate, classification or something. But in the fourth scenario, there is no tax. However, if you are levying a tax, then there is a possibility that the honorable court may take a stand, or the opposite respondent may take a stand, that since what you have paid is not tax in the first place, and hence if it is not tax, it does not fit in the definition of input tax rate, because input tax rate has to be firstly a tax, and that is why the ITC will not be allowed. So this is one counter which you may face. However, what we have done, or what position we are taking for that counter also, if they take that counter upon us, that again I will go back to section for what you can see on the first line of your screen, the definition of central tax. It again uses the word the tax which is levied under section 9. Now please understand, all taxes which are exempt, or whatever exemptions you have under GST, they are firstly tax which are leviable or levied under section 9, and then section 11 gives them exemption. So I have a counter even for this. So the counter which I'm going to give is that even though you say that this is not a tax, why? Because it was exempt, but I will counter, I'll say, sir, it is still a tax, because the definition of central tax, state tax, if you go and read, like I've taken the definition of central tax, it says tax which is levied under section 9. And please, I'm sure everybody knows this. We have again multiple judgments of the excise era, which says that even exempt goods or even goods on which there is exemption are firstly leviable to tax. We have judgments of excise, we have judgments of custom, which says that even exempt goods are firstly leviable. So since these are covered under section 9, I still can contest this particular point. But as I said, this may be slightly dicey. So this is my submission on the first issue. Priyanshi, anything anybody would like to add? You can see something in chat, or should I take up the next
There are
issue?
queries, sir. So if you want, I can take that later on, or I can
If
take.
see, we'll do one thing, we'll go in the flow. If it is connected to our point, we'll take it right now. If it is not, then we'll take it later. That you can just screen when you are going through the
So
chats,
there's
right?
a question. So Dribajyoti ji is raising his hand. So should I unmute
Please,
him?
please, please, please.
Dribajyoti ji, I've asked you to unmute. I'm not able to unmute you. If you can unmute yourself and
Yeah,
ask.
is it okay right now?
Yeah, please.
Uh, I've understood your points, but there are some occasions where, either the supplier has charged wrong rates, where as a recipient, we are getting a notice from the GST authority.
Sir, we are covering that scenario itself. That supplier has charged. Correct, sir. Yeah,
Yes,
please
yes,
go ahead.
yes. So in that case, I mean, what should happen? I mean, the onus of proving false on supplier or onus of proving right taxes also
On the recipient. Okay.
on the recipient.
Okay. So, sir, I think you are connecting with section 155, and I can understand why, because in all ITC notices, the first section that even the department quotes after quoting all these section 16 and all is 155, right? Please let me explain and discuss on this point. See, when the law says burden of proof, what is this burden of proof? You can just go to section 155 if you all have the barracks in front of you. It says that you have to prove the eligibility. And when it says you have to prove the eligibility is as per section 16, 17, 18. Once you prove that you have satisfied the conditions of 16, 17, which is the eligibility or the restriction part, that's it. That relieves you of the burden which is put upon you on in section 155. So you are not in that position also, and you are not even called upon by the law to prove whether the tax which was charged by the supplier was correct or not. I don't think, or I don't interpret that 155 in that sense. Sir, what you are saying, we have also countered this in one of the PH where the opposite person who was very senior and learned officer, he was JC level person. So he countered the same thing, and this was my response to him. Now, see, please understand one thing. See, let us have a very candid discussion. Maybe whatever we are discussing or whatever positions we are taking, at least I cannot assure you that you will get the favorable at the lower stage, because I'm sure everybody present over here is having this bad experience, if I can use this word, that despite of you being correct, despite of all your suggestions being perfect or all your submissions being perfect, somehow the department is going by a different thought process, or maybe under some pressure or under some targets, that they are not providing you any relief at the lower stage. But our submissions or whatever pointers we are discussing, this is my understanding that whenever this will go to a neutral stage like the tribunal, or maybe if you are going to high court in later or today in writ, I'm sure these can be a very strong grounds to contest. Fine, sir. So please take these grounds. Whether or not your officer accepts, that is a different thing.
I mean, we are leaving the situation to an uncertainty where the where the litigation and once it goes into litigation, it has no time.
Correct, sir.
So that is where I mean we are also facing some issues.
Sir, so that is what I mentioned, sir. It is out of our control key how the officer is going to take it. But if we think from a law point, this is what is my submission. Manish ji, you may please. Manish ji.
Yeah, Vijay ji. Is it audible now?
Yeah, very perfectly, please.
Yeah. In one of our case, we have claimed IGST instead of CGST, SGST.
Sir, I have taken that in my scenario 3, and there are two very recent judgments of Sunday and the other one. Sir, please use those judgments. They are exactly dealing with the similar case. So Orient Traders and Sunday, these are the recent judgments on the same thing. Obviously, in these judgments, you got the relief through writ. And let me just inform you, writ is a personal order. So if the officer is not accepting that writ order, the officer is not wrong. But I just want to inform you that this is what is the position taken by the honorable courts. So either you may go in for writ, or if you are ready to wait till the tribunal comes, I can assure you that this will be a favorable thing from your side, sir. Right, sir? Okay. Now let me take you to the second issue. Now the second issue crops up from the definition of input capital goods, input service. Now I was very happy when the GST law came, because I'm sure everybody of you who has studied the service tax law, the excise law, and whoever has practiced, our biggest challenge was understanding the definition of input capital goods, input services, because it was very wide in the Senvat credit era, and it was having many ifs and buts and exceptions to exceptions and all. So Priyanshu, I'm sure you being a very young person, maybe you have recently, if you have studied the old excise laws, I don't know when you qualified, so you would have always had that pain of remembering those big, lengthy definitions of capital goods, inputs, input services.
Yes,
I'm
sir.
sure
I did
everybody,
not have the practical exposure, but I did, I
but
had
at
to.
least the pain was there for learning, right? And even answering in your exams. Now, that was a biggest challenge when we were also handling the excise issues, the litigation issues. And even the courts were many times confused in interpreting those lengthy and those definitions with so many punctuations. Now, I was very happy when the GST law came because it simplified the entire concept of input service. It simply says, firstly, there are two categories. One is goods, one is service. And within goods, if you capitalize it, it will become capital goods. If you do not capitalize it, if you write it off to P&L, it will become inputs. It was as simple as this. And other than goods, whatever it is, it will be input service. Simple, full stop. Now, what is important is in all these three definitions, they had some common criteria that these goods or these services would be treated as capital goods, input service for the purpose of ITC only if either they are used or they are intended to be used. Both these words are important. So actually you are using it or you have the intention of using it. And again, a very big litigation bomb, which is yet to explode, is what is the concept of in the course and furtherance of business. I will not take that point because that is even there in supply and it can be deliberated upon for 3 hours. I'm not going into that. We'll be confining ourselves to what is very specific to ITC. So there are two major issues, two major areas of litigation in the definition. One is this particular phrase, use or intended to be used, and the other phrase, in the course or furtherance of business. So let us take you to the issues which I could identify, which we are handling, is first relating to whether goods or service has to be seen from the perspective of the supplier or the recipient. Now you'll say, sir, what is this? How can it be different? I'll give you a very simple example. What can be goods for one person can be services for another. This is what I mean to say. And this is what is going to create a problem in future. How I'll explain. So let us say I am appointing Priyanshi as the architect who is going to be involved in constructing the building. Not sorry, architect. Let me just change the example. She is the engineer because building anyways, you are not going to get credit, at least till we get the decision of the Honorable Supreme Court in Safari Retreat. We are keeping the building point aside. Let us say Priyanshi is the technical engineer who is going to do the installation and commissioning of the plant and machinery. So let us say I've imported a plant and machinery worth 200 crores. And for installation, I am appointing Priyanshi, who is the engineer, technical person who will be doing the installation. Now, Priyanshi is going to charge me rupees 50 lakhs for doing this entire installation, commissioning of the machine and making it in the working condition. I said, fine. So I have my machine and I'm paying 50,000 fees to Priyanshi. When I'm paying 50,000 fees to Priyanshi, Priyanshi is going to raise invoice on me with service accounting code. But our accounting standard says, which we follow in accounts, which we follow in income tax. I'm not yet saying GST. That is what we have to find out the answer. That you capitalize this in your plant and machinery. So following the accounting standard, I capitalize this 50 lakhs in my books as part of my plant and machinery cost. Now I want to avail ITC of this GST paid by or charged by Priyanshi to me on this 50 lakhs. For simplicity, I'm just taking it as 10 lakhs for simplicity without going into the actual technicals. So she has charged me 10 lakhs. So 50 lakhs plus 10 lakhs, 60 lakhs is her invoice. I paid her 60 lakhs. All the conditions of section 16 are satisfied. My question to you is, in her hands, that is the supplier's hands, it is a service. But once I report it in my books, once I record it in my books, it is embedded in the cost of plant and machinery. Now, the same thing happens in many other areas. I'll give you more examples too before I come to the question. Another area is where I'm buying some material, that is raw material or something. Again, we have studied in costing, we have cost accounting standards also, which says that in such cases, whatever is your transportation cost, whatever is loading, unloading has to be added to the cost of material. Giving you the third example. Third example is of software, which is a very big issue, that how it has to be dealt with. Now, my question to you all is that if Priyanshi has raised invoice to me of service, but I have capitalized it in my books by adding it to the plant and machinery, whether in my hands, this ITC will be treated as ITC of goods or service, my first question. And second, since I have capitalized it, will it become capital goods ITC? Why this is important? Because there are many provisions in the GST law. See, you can see in these all provisions like reversal 42, 43, 17(5)(h) restriction, schedule 1, entry 1, capital goods, if you're sending to job work, whether it is returned or not, in all these cases, there is a difference in provision made for goods and service, and also there is a difference in provision made for capital goods. So this particular point is going to pinch me in all these cases. So I hope everybody is clear with my question. So you may just answer whatever you feel. My question is simple. Priyanshi's invoice reported in my books, capitalized in machinery, whether it is the ITC which I'm taking on her invoice is my ITC on goods or service. And if you are saying it is goods, whether it is capital goods or inputs. Yes, you may please answer. Priyanshi, you're mute.
It is like this. For different item, the treatment will be different. Like
Your voice is not really very clear. If you could just check your connection, probably. Sir, are you facing the same problem, Vishal sir?
I'm fine. Maybe I'm using the headphones now, so
Okay,
it is slow, but I'm able to hear. Sir, please go ahead.
So it's a different different treatment in terms of different items you have said, particularly in case of job work done for any civil kind of job work done on a plant and machinery equipment and all that. If it is capitalized, then I mean I don't get the GST credit for that.
Sir, so I've removed that now, so that is why I changed my example.
Right.
I've removed building and all. So let us take example of plant and machinery, sir. Let us be very simple. So let us not get into the issues because it is yet to be answered by.
Yeah, plant and machinery. The moment I capitalize in the plant and machinery, the cost of plant and machinery. The moment I capitalize, I don't get. I'm not eligible for the GST.
Why, sir? Plant and machinery GST is eligible, sir. 100%. There is no restriction in 17.5H.
I mean, you cannot get double benefit. Plant and machinery, at the moment you capitalize, you are claiming depreciation.
No, sir. I am not capitalizing the GST portion. I'm only capitalizing her 50 lakhs. The 10 lakhs GST which she has charged, that is what I have to decide. See, if I'm ready to get ITC, I will not capitalize it. So I'm eligible to get ITC. So I have not capitalized the GST portion. I've only capitalized the 50 lakhs portion. My question is this 10 lakhs GST charged by her, which I want to take as credit, which I have taken as credit, it is appearing in my credit ledger. See, it is appearing in C plus S or I. That is very simple. But the point is, when I have to apply any of these provisions, like let us say I have to do reversal under 42, 43, there is a separate working for reversal under 43, which is for capital goods credit, and there's separate working for reversal for inputs and input service. Similarly, if you're applying for refund, you are not eligible to get refund of the capital goods related ITC, but you are eligible to get refund of the inputs and input service. So there are so many case scenarios where the law has made a distinction between ITC of capital goods and ITC of inputs and input services. That is why my question, if I have capitalized the cost, that is the 50 lakhs, the 10 lakhs GST levied by Priyanshi on that, what is that GST in my hands? It is GST on goods on service first. And if you are saying it is goods, and since I have capitalized, whether it will be capital goods credit, because the moment it is capital goods credit, I'm not eligible to get refund. Let us say I'm an exporter, I'll not be eligible to get refund. Tomorrow, if I have to do reversal, I have to apply rule 43. So there are so many scenarios where this will make a difference.
So in the chat box, there are answers which are
please, you may just read out the answer. And Priyanshi, you may also share your views if you have any.
I think it's a capital good because, as per the definition, it clearly states means goods, the value of which is capitalized in the books of accounts.
Okay, so this is your view. This is your
that is my view.
Okay, sir. Perfect. Let me please share me the views of others.
Yeah, in the chat box, sir, it's written that it must be the perspective of the recipient. Hence, the good is a capital good.
Okay.
Another person writes, sir, it should be considered as per the perspective of the consumer.
Okay, so all are on the same page. So you all are on the same page, right? Now, I have a simple input on this. Input means my input, not inputs. So my poser on this is that let us say the GST officer comes to your premises and he is auditing your books. When he will take your books, he will see that the invoice of Priyanshi is showing a SAC code, not a HSN, right? SAC is for services, HSN is for goods. Now, the moment he sees it is a SAC, that is a service accounting code, and rightly so, because what you have given to me is an engineering service. And Priyanshi, answering your or countering your point, you just read out the definition of capital goods. You started with what? Goods, the value of which is capitalized. Now, the first point itself is your invoice is of service. I am capitalizing it. That is a different point. See, the same point I've also put in yellow on the screen, that whenever you get a customized software made, like you get some ERP solution made, which is running in some 500 crores. And this particular, again, the invoice that you will receive from the software developer or the ERP solution provider will be of service. And since it is a customized software, there is no doubt whether it is goods or service, it is service. But as a practice, as an accounting practice, since it is of a considerable value and it is of use over a long period of time, I am capitalizing the software in my books. Again, the same question, whether this 500 crores of software capitalized in my books, it is a service as per the classification of Schedule 2. But the moment I capitalize, will it partake the character of capital goods? So similar point. My understanding, I'll just share. See, as I said, see, we are all in the learning phase. If you see my name written at the bottom of the screen, it is Vishal Poddar, a student of GST. So I always believe that in every session, I get more value additions, more than what I give. So I'm open for all new inputs. But this is my understanding that if I implement or apply the law in its true sense, I believe you have to see it from the supplier's perspective first. Why? I'll tell you. See, there is a difference between, see, those whoever are saying it is from the recipient perspective, you may be right if you are looking it from the income tax perspective. Because in the income tax perspective, the receiver, we decide the character of income, whether it is a capital income, it is a PGBP, HP, whatever, from the recipient's perspective. Because income tax is a tax on the recipient. However, when it comes to GST, GST is not a tax on the income. It is a tax on the transaction.
There's
And
only
again,
the chat box, sir, because...
1 second, let me just complete. So GST is a tax on transaction, and the transaction has to be classified strictly as per Schedule 2. It is not whether it is supplier or recipient, because in GST, in some cases, even the recipient is the person liable to pay tax, but he's only the person liable to pay. He is not the person who's going to decide the nature. The nature of the tax or the nature of the supply is decided by Schedule 2, which will decide whether it will be supply of goods or supply of service. So I believe in GST, it has to be seen from the supplier's perspective or from the transaction perspective, read with Schedule 2 to decide whether it is goods or service. Now, Priyansh, you may just add whatever is there in the chat box.
See, Anuj Sharma writes, because the GST Act is based on destination principle, hence to be seen from recipient point of view.
Great. Anuj, it is a good insight, but I just beg to differ because see, prior to GST, it was a origin-based tax as what we saw in sales tax. Did it change the nature of supply? Answer is no. Over there, what was goods, what was service. Only see what changes in destination-based and consumption-based, I'll tell you, it is only which government gets the tax when I'm talking about state government. So when you change it from origin based to destination based, only one thing changes in the entire taxation, that is which government gets the tax. So when we were in the VAT era, it was the supplier state which was getting the tax on any supply or sale, whatever you call it. But in GST, in the same transaction, it is the recipient state or the consumption state which is going to get the tax. So I believe, again, let us not mix between the destination consumption principle with the supplier and recipient concept. So whether the transaction is a goods or service has nothing to do with the destination principle of GST. This is what is my input on this, right? So fine, anyways, this is my input. And I think we'll proceed because we have limited time and I have a lot of issues. And I'm sure everybody is very keen on going to more issues. See, intentionally, participants, I have not taken those issues which you commonly read everywhere, 2A, 3B mismatch. In my PPT at the end, I have taken all those slides with all my submissions on what could be your replies for all those issues. But I may not touch upon that. I intentionally kept it at the end. If we get time, we'll discuss, or else those slides would be shared with you. I just wanted to discuss on the newer aspects because already we are facing this, and some of these I'm sure everybody will be facing because now the real litigation has started. Till now, the litigation was only that litigation either relating to transition where we had the Tran 1 issues, or initially the filing related issues, or of late it was the all types of your fake invoicing and this and that issues. But those are not the actual litigation. Actual litigation has started now when it comes to interpretation. And all these pointers, I'm sure today or tomorrow you all are going to face. Already many people of you have come across these issues. So let me take you to those issues first. So my submission on all this is to conclude this point. I understand as on date that you have to see the classification vis-a-vis Schedule 2, neither supplier nor recipient. And if it is a supply of goods, then it has to be classified or the treatment has to be as goods, then maybe inputs or capital goods. But if it is a service, like in case of software or like in case of Priyanshi's invoice of engineering service, even though I capitalize in my books, but it still does not fit in the definition of capital goods. I already marked this point to Priyanshi. The definition of capital goods starts with the word the value, goods, the value of which is capitalized. But the first itself, starting point is not satisfied. It is not the value of goods, it is the value of service. So I believe we have to go by the classification as per schedule 2, and accordingly, even though it is getting capitalized. So answering this, even if my software value is getting capitalized, even though Priyanshi's invoice is getting capitalized, I will still be treating it as service. And whatever reversals, whatever refund will happen, I will always classify it as service. And also, this will also be, if you put it on portal, if you remember, let us say if anybody of you have filed the refund applications, you have to attach the details of your ITC with all the matching with your 2A, etc. In that also, the invoice will be having a service accounting code. So automatically it will become eligible. Even though in your books you have capitalized, still I believe the officer should not challenge it. This is my submission on this particular issue. Let me take you ahead. Again, in the definition, we had this phrase use or intended to be used. I'm sure the issues which I'm going to cover here are the one which you already would have faced, because these were the issues which we generally face immediately after the COVID. What is the example? The COVID brought a new concept. It was there earlier, but it was only limited to few industries like the IT industry. Later on, it spread across to many industries where the industry started allowing their employees to work from home. Now, when they started the employees to allow the employees to work from home, even now in our legal consultancy offices and even in our CE offices, we are allowing many of our staff to work from home. What we have done is, or what many companies do is, they provide laptops, they provide ACs, they provide computer tables, they provide internet connection, they provide the entire facility. They create that facility at the place of that employee. So this has happened very commonly, specifically post-COVID. Now the question is that the law puts a requirement that your goods, service, whatever ITC you want to claim on, should be used or intended to be used in the course or furtherance of business. So my question is whether this requirement is there that it should be used in the premises. Which premises? One is business premises, and now adding to it, because now you are getting a new type of notice. I'm sure you all would have faced this, that let us say I'm using something in a place for which I have not taken a registration. So let us say I have multiple places of business. One of the place is my backend office, which is not going to make any supply. Now, the requirement of the law is clear. If you are any office or if you are any branch is not making any taxable supply, registration is not compulsory. So I have not taken registration of that particular. So let us say it is my backend office where only research work is done. So I have not taken any registration of that office, but I'm incurring some expenses in that office. Now, a new issue has come in GST that at the time of audit, they say that if your inputs or input service are consumed at such a place for which you have not taken registration or which is not added in your registration certificate, they are disallowing the credit. Now I'm linking that issue with this issue also, that here my goods, that is inputs, input services, and even capital goods are being consumed at my employee's place because they have been installed over there. Again, my employee's place, definitely I'm not going to include it in my registration because it is not possible. If I'm an IT company, I may have thousands of employees who are working from home. I cannot include everybody's address as my additional place of business, and that is not required. Now the question is, if these goods services are being used in a place, one, either it is not a business place, why? Because it is employees' home, or second, it is a business place, but for which I have not taken a registration or I have not included in my registration as additional place, whether ITC will be eligible. This is the question. Maybe you can answer this question first. What is on your screen? That is about the employees. Maybe about the registered place, we can come in the next slide when we'll go to the point of registered person. So first question, all these expenses where the installation is done at employee space and I'm making payment of that, whether ITC is eligible. Yes, Priyanshi, any replies?
Yeah, sir. In the chat box, Shubham G writes explanation to section 16(2)(b). And Anuj G writes eligible, sir. It is used in the course of furtherance of business.
Okay.
Manish G writes it must be eligible.
Okay, I think 16(2)(b) explanation, what Shubham Ji is referring to is, I think, relating to that bill to ship to. Okay. Good. That is also very good input, Shubham Ji, that you can always say that the law has also make a specific provision when it says that in bill to ship to type of scenarios, you are eligible. And yes, this is, I think, now even a settled position. I am not finding any issues right now with many officers, but yes, still in some smaller places or in some other places, the officer may be challenging this, but you all are correct. There is no requirement in the law which says that the goods should be used in your business place. If you see the entire section 16, even in the second condition of section 16(2)(b), which says goods or services should be received, it is full stop. You compare it with the excise law. In excise law, in the Senvat credit rules, the requirement was that it should be used in the factory of the manufacturer, or it should be used in the premises of the service provider. So there was an express condition in the Senvat era, that is in the excise era, where for getting the ITC, the inputs, capital goods should have been used in the business premises of the manufacturer or the service provider. But when we shifted to GST, the law has very intentfully, not by any mistake, but very intentfully, they have made a full stop. If you read section 16(2)(b), it simply says good services are received, full stop. So it has not mentioned that they should be received in your business premises, and nowhere in the entire section 16(17) or the aligned rules, the condition is that it should be used in your business premise. So yes, I concur to everybody's views here that you are 100% eligible, whether or not these are used in your own premises. Second issue, which I think is simple one, is that whether there is a one-to-one correlation required. What I mean by one-to-one correlation, let us say I have three types of output, A, B, C. Now I'm bringing some raw material which is required for A, another raw material for B, and another raw material for C. So for all the three products, the input requirements are different. Now let us say today I have purchased the raw material for B. So I have the ITC, which I have taken for raw material of B. But in this month, my output is only of product A. The question is, I have not used this raw material for product A, but I have the ITC of raw material for B and my output is sale or supply of product A. Can I use the ITC which I have consumed on raw material of B for paying the tax of product A? That is my second point. That is what I mean by whether one-to-one correlation is required.
Sir, CA Vijay Nagaraji writes no correlation required under the GST law.
Perfect, Vijayji. So that is correct. And we do not have any GST decision because maybe this issue is not required. So nobody has raised yet. So there is no requirement of that decision. But if I quote some excise decision where, please remember, excise law was much, much stricter than the GST law. As I said, the definitions were more stricter, the conditions were more strict. So if you are taking the analogy from excise law, believe me, you will be always in a much favorable condition in GST law because excise law was much stricter than the GST law when it came to all these conditions. So there is no requirement of one-to-one correlation. You get ITC cross-functionally also. The only requirement is that it should be used in the course or furtherance of business. So all these inputs are in the course of business. All my outputs are in the course of business. So once that is established, one-to-one correlation not required. Yes, Priyanshi.
So there's a question which states, can we claim ITC on AC installed at one room of residence used as office?
I'll just answer it in my next slide because I'm yet to take that question where I had posed one more question that if one of my business premises is unregistered, can, so maybe Priyanshi will keep this question for that particular slide. It will be coming very soon, right?
So Dhruva Jyoti is raising his hand.
Please. Yes, sir.
Since I think since the last 7 years, I've been reading, listening about furtherance of business. What do you mean exactly by the word furtherance of business?
Sir, I mentioned at the start, there are two phrases used in this definition. One is use or intended to be used, and one is course or furtherance. But course or furtherance is such a huge phrase. So, sir, pardon me if I just keep this point aside. But for the time being, just if I have to answer in short, because why I don't want to get into it, because once discussion starts, it may extend to any level. But if I answer in one line, what is in the course of business? It is something which is directly connected to business where you can identify that, yes, see, this is how I'm using this goods or service in my business. That is in the course. What is furtherance is something to be explored. But if I again relate it to other laws like the income tax law, the GST law, and the other laws, wherever the term business is used, furtherance has a much, much wider impact. I'll give you an example. Let us say I am working on a new project. I want to start up a new project or a new, I want to get into a new vertical. I want to start a new product line for which I'm doing R&D. But somehow this R&D fails and I don't get any fruitful result, it means my entire R&D expenses are a loss. Now, whatever expenses I incurred for R&D, wherever I paid GST, I had taken the credit. But now ultimately that R&D has not resulted in any type of fruitful output. The question is whether this R&D expenses would be eligible for ITC. I believe yes, because it is in the course or furtherance of business. And for this, I will request if anybody wants to use any case laws, what we are also using to contest for course or furtherance, you have to go to section 37 of Income Tax Act. In section 37 of Income Tax Act, you are given deduction for all general expenses. And over there, the requirement is that the expenses should be related to business. So you can draw the analogy of course or furtherance by referring to case laws of section 37 of Income Tax, right? But it is a very much wider term. Yeah.
Thank
Yes,
you.
Priyansh.
Shastri ji is raising his hand.
Please, please. Yes, Shashastri ji, please.
Sir, I asked you to unmute yourself. Yeah, please.
Regarding ITC inputs,
Yeah. Sir, go ahead, please. Now, Priyanshi, I think you'll have to allow again unmuting. Because
Sir, I've allowed him. He is already on unmute mode.
Okay, okay.
So you can, sir, please do not click on the mute unmute button. I've already unmuted you. You can just,
Shashastri ji, please, you may unmute yourself and ask.
I will message in a group.
Okay, sure. No problem.
Yeah,
you
sure.
may
Sorry
put in
for
the chat. Not a problem.
Yeah.
Not a problem.
Okay.
Now, a small thing for which I'll not take time, I'll just answer myself. Let us say I have purchased a machine, which is just purchased, it is yet to be installed. One, whether a machine which is yet to be installed, that is, it is not yet used, not yet put to use also, like we have a concept of put to use in income tax. So the first stage is the machine is only purchased. It is yet to be even installed or put to use, whether ITC is eligible. Second stage, the machinery is installed, that is, it is put to use, but no commercial production has started. I will start maybe after 5-6 months whether ITC is eligible, because the term use is used or intended to be used. I'll directly answer so that I can go spend more time on the other issues. Here, the law says use or intended to be used. So even when you purchase a machine, purchase any raw material or anything which is yet to be used, which you may be using in future, that is still eligible for ITC. So the condition that it should be actually used or it should be put to use is not a requirement in GST to get the ITC credit. Now moving ahead, taking further issues again relating to this point only. Again, this particular point that one of the requirements is that it should be used in the course or furtherance of business. As I said, we refer to section 37 of Income Tax Act for drawing the analogy for this particular term. So this is one of the very important judgments. This is from the excise era. You can use this judgment whenever you are trying to draw an analogy, what would be in the course or furtherance of business. And then on the basis of this, the question that will arise that whether I should get the credit of normal loss, I believe yes. And I think it is now even settled in the GST by way of, I think, some circular also and AAR also. Fortunately, normally AAR never gives favorable rulings, but for normal loss, it has given a favorable ruling. And even you have these cases of the excise era where it says that if there is any normal loss, it will be eligible for ITC because it will be said to be used in the course of business. But the question is, what about abnormal loss? Now, we all know the difference between normal and abnormal loss. Normal loss is the loss which is part and parcel of your activity. So if let us say I'm doing some manufacturing and 5% of the raw material is expected to be wasted, it will be lost anyways I do the manufacturing. So that is normal loss. But let us say in this particular month, due to some reason, I wasted beyond this normal limit of 5%. So my actual waste was 7.5%. So there was 2.5% which was additional wastage, which is classified as abnormal loss. Now the question is, for these raw material items which are lost over and above your normal loss, whether they would still be eligible for ITC. Now, I link this point with section 17(5)(h), which is the biggest challenge because that is where they have barred us from taking credit. So section 17(5)(h) says that in certain cases, credit will be blocked. Priyanshi, do you have the BEAR Act in front of you?
Sir, I can just open it. Yes,
Yeah,
sir.
because I don't want to change the slide because it may be difficult for people if I keep on
Sir, I'll
swapping
just
slides.
open it and I'll share the screen if that's.
No, I just want you to read because it is one line. Because I want to draw some analogy here. I want you to read section 17(5)(h) because that is where they have disallowed ITC on goods which are lost.
I'm doing it, sir. Just a second.
So in the meantime, if anybody wants to share your views about whether abnormal loss items should be eligible for ITC.
Sir, it states that ITC cannot be claimed when the goods are lost, written off, stolen, damaged, or given away.
Perfect. Now here is a challenge when we talk about abnormal loss, because they have used the word where the goods are lost. See, abnormal loss will not be falling in the other terms like stolen, discarded, etc. So we are not bothered about that. The question is when the law under 17.5H explicitly says that when we will not allow credit when the goods are lost, whether abnormal loss will fall in that 17.5H barring and whether you will not be eligible for that ITC. This is my question. Yes, Shubham, I just read your comment. You said that it was intended. Now that is what is the point. See, condition says you are eligible for credit which is used or intended to be used, but then there is an express barring provision under 17 and 17.5 is a notwithstanding clause, so it overrides all other provisions. So it even overrides your original condition of use or intended to be used. So once it is your use or intended to be used, you first bring it in your GAT parameters. But if 17.5 bars it, then despite of it being eligible because of use and intended to be used, still it will go out because of 17.5H. So I don't think we can take that stance that it is used or intended to be used. If you want to take credit of abnormal loss, you need to have some other strong input besides that point, because you have to get out of 17.5H. Yes, sir. Can you just read? Somebody has answered. There is a lengthy one.
So it's a question by Lalitji.
So let me just keep it parked for a minute. You just read the question. If it is related to this, we'll take this. So my input on abnormal loss is that it will get classified in 17.5H and credit will not be allowed because these are the goods which are lost. Yes, obviously there is a counter. You can always say that on the same logic, why normal loss? See, again, normal loss is also goods which are lost, but still they are allowing the credit. So if that is the goods for which credit is allowed, why they are not allowing the credit for abnormal loss? So that analogy can be taken. One. Second, interestingly, I was reading article of one of my friends. He had drawn a beautiful difference between what is a loss and what is lost. There is a difference between loss and lost. This is what analogy he tried to do, and it was a very beautiful analogy. And if I go by that analogy, then what they have disallowed is goods which are lost. When the term uses goods lost, discarded, stolen, it means where the goods in totality has gone away. Like example of goods lost is, let us say, lost by fire, lost by like this floods and all. But when the goods are put into the production process and during the process, the goods get consumed or gets wasted while making the product, it does not fit in the term of goods which are lost. See, whenever we are interpreting the law, and if there are different terminologies used, we have to do enjusdem generis. What is enjusdem generis? We have to take the color of the other words to find out what is the intent of the law. If I go by that enjusdem generis principle of interpretation of statute, then lost has to be read along with stolen and all. And if I read it in that sense, in that particular case, only those goods which are lost by way of theft, by way of somebody taking it away, or by way of some type of fire and etc., that will fall in lost. Loss, that is normal loss, abnormal loss, is a different thing. It is those goods which are used up while doing the production, and some are used up within limit, some are used beyond the limit. So this was one of the interesting pointers I found in the article written by one of my friends. And if I have to contest abnormal loss, definitely I'll be taking these two positions. But my personal belief is I believe abnormal loss will get disqualified because of 17.5H. Then you have these common disputed issues, same relating to 17.5H, that if you have purchased something which you're distributing to your employees, whether it will be eligible for ITC. Similarly, if you're distributing something to your suppliers or customers, whether it will be eligible for ITC. Now here, again, there is a conflict between in the furtherance of business and 17.5H. Now, again, if you ask me, my understanding is that if I distribute coins to my employees, see here the challenge again in 17.5H is the word gift. Priyanshi, I'll just request you to read that again for me. 17.5H.
Yes, sir, just a moment. Goods lost, stolen, destroyed, written off, or disposed of by way of gift or free samples.
Perfect. Again, goods lost, stolen, destroyed, or given away by way of
Free
gift
samples.
or free samples. Now, when I'm talking about these two issues, that is gold coins distributed to your employees and gift articles given to your supplier customers, we are using the word gift. Many times when we give to employees, we say it is gift to employees. When we give to our customer suppliers on some occasion like Diwali and all, we say it is a gift. I still believe it will not fall in 17.5H. Again, going by the same injusdom generis interpretation. How? I'll explain my viewpoint. Obviously, there can be counters. See, when the law use the word goods lost, destroyed, stolen, and then it says or given away by way of gift or free samples, over there, when they are using the word given away by way of gift or free sample, there is nothing what you are going to get in return, or there is nothing which will accrue to you as a benefit. Here, when I'm giving something to the employee, it may be part of my employee contract. A contract may be written or it may be an industry practice. Like giving away gifts on some occasion is an industry practice. It may not be written in your employee contract that you'll be giving gift. But if it is an industry practice that you need to give something at the time of Diwali or at that time of some New Year or at the time of some Christmas, you have to give it. So in that particular case, I personally believe that the word gift used in 17.5H and the gift which is covered over here, which we give to employees or our suppliers or customers, there is one difference. Here, we have some reciprocity. Why I'm giving to these particular set of people only? Because I am getting something in return, or I have expectation of getting something in return. Like I want to keep my customers happy. I want to keep my suppliers happy because I have a business relation. So if I look it from that angle, I'm interpreting that these things can be challenged and you can definitely defend or contest this. Now, again, when I'm saying all this, I just read somebody's comment. They are saying that the officer will not accept. See, I have already given this disclaimer at the start. Whatever we are discussing today may be a point of discussion only at tribunal or high court or Supreme Court, because at lower levels, unfortunately, the assessment is being done with a predetermined mindset. So I am not suggesting that you will get any type of relief or any type of concession from the officers. But these are the positions which, according to me or according to whatever understanding we are developing, can be a very strong points when you are contesting at a neutral forum. But obviously, please use them in all your replies, in all your defenses, because if tomorrow somebody else's decision comes and you have also taken the same stand, maybe you can claim the same relief at the lower level. Or let us say if your matter escalates tomorrow at the higher level, then there may be a challenge ki why you did not took this particular ground at the lower level. So better is to take these grounds. This is my understanding of 17.5H restrictions. Priyanshi, anything we need
So
to
there's a
take from the chat?
question. So
Yeah,
there's a
please, you
question.
can take the question.
Does this proviso also includes warranty replacement?
See, warranty replacement, I think now there is no question or dispute because there are two back-to-back circulars. One is a very recent one. See, warranty, I'm sure is now very clear. In fact, the second circular, which is a very recent circular, makes it even more clearer. It is always a part of your business contract. So if let us say I am the main manufacturer, you are my distributor, and you have to do some warranty because manufacturer will not come there. You are the person who are in that particular city. So you are doing the warranty, and during warranty, you are giving some part free of cost as a free replacement as a part of the warranty contract. So it has been very clearly given in both the circulars that neither for the manufacturer nor for the distributor, there will be any type of ITC reversal required. In fact, the latest circular is even making that point even more stronger because it is covering even further scenarios. So that is very clear. So you need not reverse anything. It will not fall in 17.5H. Again, because the same logic, there is a reciprocity. What is the reciprocity? It is a part of your contract or the a promise you had given at the time of selling that, okay, if something happens in 1 year, I will replace that particular part free. Yes, Priyanshi.
So there's another question, when you had discussed about no correlation between output A and input B. So there's a question which states that there are three different segments of production. So can excess ITC of one segment be adjusted against another?
I'll just escalate this question further. Somebody saying there are three segments of production. I'll say there are three different lines of businesses. Let us say one is manufacturing, one is trading, and one is service. All are done in the same registration. Now the question is, let us say I have some credit arising from the manufacturing segment. and today I am having some liability in my trading or in my service segment, all are in the same registration. Everything is having the same GSTIN. Whether I can cross segment or cross business use this credit, answer is yes, because the credit is, now I'm using a terminology, please use this in all your replies. The credit is qua person, not qua goods, qua service, qua supply, or qua business. Qua means in relation to. So if I am a registered person, under my same registration, I may have 10 different lines of businesses, 10 different products, 10 different nature. And I'm assuming nobody is having a ITC which is blocked, like for restaurant it is blocked, like for GT it is blocked. I'm not falling in any of those block categories. So whatever I'm doing is all fully eligible category. So in that case, if I have some input credit of manufacturing, because in this month I have purchased a lot of raw materials, so that ITC is pending, and my output is not having any manufacturing supply because it is yet to be manufactured, but my trading segment and my service segment is showing output liability, I can very well set off this. There is no barring at all, because in GST, the ITC is qua person. Yes, Priyanshi. Any further question left?
So we're done with the question. You can proceed.
Great. Thank you for keeping a track, because for me it is very difficult going to the chat box. So thank you for that help. So let us go ahead. Let me take you to more issues. Now I go to the section 16 in particular. So till now we were revolving around the definition of input, input credit, and capital goods, etc. Now I go to the conditions in particular. Now section 16 bracket 1, which is the mother section, and which says that credit will be allowed. What it says that every registered person shall be subject to conditions and restrictions as may be prescribed, entitled to take the credit. Again, I have already covered this paragraph earlier when I was emphasizing on the word charge. So again, here also, we have already discussed, they have said the credit which is already charged. So the tax which is charged, whether right or wrong, you are eligible to take credit. So even 16 supports that particular point, that the tax may be correct or not. Anyways, that is not my point of discussion now. Now, in relation to section 16, I have highlighted few words. We are going to discuss issues relating to this. One is, as I mentioned just now, the credit is qua person. How it comes out from section 16.1. And what is a person over here? Here, a person means the GSTIN. So if I have one GSTIN, maybe under that GSTIN, I may have multiple products, multiple businesses. In the eyes of GST, it is one. So internally, I may have any cross-functional adjustment, what we just discussed. Everything is eligible because credit is qua person. Second meaning of this is, let us say I have multiple GSTIN. So I have one single PAN, but I have taken multiple registrations. In that particular case, even though I am the same person, Vishal Poddar, but if I have 4 separate registrations all under the same PAN, but the GSTIN are different because I have separately registered those 4 premises. In that particular case, one GSTIN's credit cannot be utilized in the other GSTIN for the same reason. Credit is qua person, and here when I say person, just for your understanding, read it as qua the GSTIN. So whatever is in that GSTIN, that is all eligible. Whatever is in any other GSTIN, it is not eligible until and unless law specifically allows you. And I'll give you example where law specifically allows you that GST, somebody else's GSTIN's credit is allowed to you. There are provisions. First provision is when you are buying somebody else's business. The law says when you are buying a running business, then whatever is the ITC balance, that will be transferred to you by way of ITC 02. That is one case when some other GSTIN's credit is allowed to. Second case, when you have multiple GSTINs and one of them is registered as ISD, whatever credit comes to ISD, that also comes to you. So that is another case where some other GSTIN's credit comes to you. Except these cases, no other case, other GSTIN's credit will be allowed. So the credit is qua GSTIN. This is the first input I want to give in relation to this. Further, I have underlined certain words, conditions, restrictions, prescribed. We'll discuss all this. Now, my first poser relating to section 16 is, when section 16 says, I am just reading it again, every person shall be entitled to the credit, but subject to conditions and restrictions as may be prescribed. What does this conditions and restrictions as may be prescribed means? My first question is whether conditions and restrictions mean the same. I'll answer it myself. Answer is no. Conditions and restrictions are different. In fact, if you see, section 16 gives condition, whereas section 17 gives restriction. So there is a difference between conditions and restrictions. So when section 16.1 says that you will be allowed credit subject to conditions and restrictions, both are different things. Conditions are in section 16, restrictions are in section 17. So both are different. Now this is academic. It may not have much relevance today. Maybe in future, if some point comes, maybe this point can be helpful. Now comes the most critical and interesting point. This, I believe, can be a very big issue in future. Till date, I have not come across this, but I am foreseeing this can be a bigger issue. The law says you will be allowed credit subject to conditions and restrictions as may be prescribed. Now, when you read the definition of the word prescribed, the law says prescribed means prescribed by way of rules which are made under this act. This is the definition given of prescribed under section 2 bracket 87. So prescribed, wherever the act uses the word prescribed, it means you have to go to rules. In other words, when 16.1 says that there would be certain conditions, restrictions which would be prescribed, it means those would be prescribed by way of making rules. And you already have many rules relating to this. You have rule 36, 37, 38, 41, 42, etc. All these are the rules which are putting some conditions or putting some restrictions, right? Now, what is the interesting part? We have another definition in the GST law itself, section 2 clause 80, which defines what is the meaning of notified. It says notified means where something is notified by issuing a notification. So when the word prescribed is used, you have to go to rules. When the word notified is used, you have to go to notifications. Now just mark this, that in section 16.1, they have not used the word notified, they have used the word prescribed. Now, why I am discussing all this? I'll come to now some important posers. How it can be used in future, that time will tell. But I have some interesting points. 16.1 says that you will be allowed credit subject to some restrictions and conditions which would be prescribed. Now, when you go to 16.2, again 16.2 has some conditions. There should be invoice, goods should be received. So you should be having you should have filed the registration returns, supplier should have paid tax, etc., etc. If you see section 16.2 where all these conditions are given, for all these conditions, again, the word prescribed is used. As may be prescribed, as may be prescribed, as may be prescribed. It means what? That when you read these rules, 36, 37, these rules are flowing from 16.2. So my question is, then what is flowing from 16.1? Because 16.1 also says conditions, restrictions as may be prescribed. If you go to 16.2 where all these conditions are given, or if you go to 17, like 17.1, 2, 3, if you go to 17.1, 2, 3, which says that we will not allow you full credit, we'll allow you part credit. But again, it says how you will do part or proportionate, it will be prescribed, and it is prescribed in rule 42, 43. So rule 42, 43, that proportionate calculation is coming from section 17. Because 17.1, 2, 3, where it is given proportionate, over there also the word prescribed is used. And from there, you come to rule 42, 43. I hope you are getting my point. So now my question is, then what is 16.1 covering? When 61 says that we can impose conditions and the conditions would be imposed as prescribed, that is by way of rules, then what are those rules 16.1 is referring to? Because whatever rules we are having as on date, they are all already covered in 16.2. 16.2, if you see the law, that is again using the word prescribed at many places, and using those prescribed powers, these rules have been issued. This is what is my poser. Now you'll say, Vishal, how this is going to impact us? I'll tell you. Or what is the relevance of this? Now, whatever I'm saying, maybe something more relevant to the department side. So please don't share it with them. What could be covered in section 16.1 is one dreadful rule like 36.4, 86A, 86B. Now, these three are the biggest challenges of GST ITC. What was 36.4? I will allow you credit only if it is reflecting in your 2A. Now, we have challenged that rule, and today also we are challenging that up to 1st Jan 2022, mark this date, 1st Jan 2022, any notice asking me to reverse the credit on the basis of matching mismatching is ultra vires. Why? Because we are taking the position there was no condition in the law which has put this condition. This condition of matching mismatching has come directly by way of a rule, that is rule 36.4. And we have been studying this in income tax and other taxes, that any rule, if not supported by the legislator, that is a statute, that is an act, it will be ultra vires. Now my question is, can tomorrow in the High Court or Supreme Court, this particular position can be taken by the department that no, 36(4) we already had the power to put this restriction or put this condition. How? Because of 16(1). Because 16(1) already has said that you will be allowed ITC subject to some restriction condition. Though we all have taken that stand, and that is why, let me inform you, from where this date 1st January 2022 has come, because from 1st January 2022 in the act that new condition was added. Condition was added earlier, but it got notified from this date 16 bracket 2 bracket double A small, which says that you will be eligible for credit only when it is reflecting in your 2B because the supplier has uploaded in his GSTR1. So this condition has now been specifically added in 16(2) double A. But my point is, can the department take this position that no, it was not required 16(2) double A, because this was already, we were having the power to make these rules in 16(1) itself. Same is 86A, that is blocking your ITC ledger. Same is 86B, that is making you compulsory pay 1% in cash. All these rules putting some restriction on putting some restrictions on ITC. We are challenging them in writ, and in many cases we have got favorable decisions. In fact, our own decisions are favorable, and there are multiple other decisions by other various high courts that these rules are ultra vires. But my poser is, can this actually be wrong tomorrow if somebody says that no, we had that power under 16(1). So this has to be tested. This is my just input to you, maybe just so that you can be prepared. Priyanshi, any pointers on this from anyone?
No, sir.
Great. Let us move ahead then. Now I come to the next point. Now, after I discuss this condition in 16(1) that it should be restriction, condition, notified, prescribed, everything. Now I come to the main point. 16(1) starts with the word every registered person shall. So the law is allowing credit with the basic requirement that you should be registered. And now I've already mentioned this. When I read this section, I read the person as GSTIN. So I'm not reading it person like Vishal Poddar or ABC Company Limited. I'm reading it as a GSTIN. So this condition has to be read like this, that every GSTIN shall be eligible for credit subject to this condition. Now coming to certain posers. The first poser is the question which is pending. One question which I had put, one question somebody else has put. I'm taking my question first. I have 5 business places. All are part of my CA practice, my legal practice. 4 I have covered in my registration. So out of 5, 4 I have covered. How 4 I have covered? 1 is my principal and the remaining 3 are my additional, because these are the various branches from where I'm doing some outward supply. But my 5th branch or my 5th office is a back office. It is comprising of only 3 people for whom I have taken a very small 100 square feet place. What is their job? They are my back-end research team. They have to come, they have to sit there and do research of whatever amendments is happening, whatever new case law is coming, and giving the summary to me, which I can use in my work. So that back-end office, which is the 5th place, I have not taken registration. It means I have not included in my registration certificate. Now, the first question comes whether it is legally correct. I believe yes. Why I believe yes? Because the law is very clear. You need to take registration only of those places from where you are going to make a taxable supply. In fact, in section 23, there is an exemption that if, let us say, I'm not going to make a taxable supply, my entire supply is exempt or non-GST, or it is covered in RCM, then I need not take a registration. So that is a relaxation given in section 23 itself. So out of my 5 places, I have not taken registration for this 5th place, which is legally correct according. Now coming to the main question or challenge. In that place, I am paying rent for that place, for which the landlord is charging me some GST. I have installed some equipment. I have purchased some computer, some table and everything. So I have some inputs, capital goods, input services coming at that place. And I have not taken registration of that place. Now the question is whether I will be still eligible to take ITC of those expenses or capital goods coming at that place, or because of this condition of registered person, I will be debarred from taking this. And to this, I will add the question of one of the participants. Priyanshi, what was that question which we had parked?
So if there are 3 segments of the business,
Yes.
so can one input be set off against another
I
segment?
think, but that I think answered, no? I think there
So
was
that
something
will be
related to place.
So that also we had answered.
No, I had parked that question for this
Okay,
slide.
just a second.
There was something relating to place. When I was discussing that employee issue, that you are purchasing something which is installed at employee's place. Okay, in the meantime, you can answer me this. So my question is, my fifth place, which is not
Yes, sir.
registered. Yeah.
So can we claim ITC on AC installed at one room of residence used as office?
So adding to this, so let us say one of my business place is part of my residence itself. So in my residence, I have 4 BHK, out of which one room I am dedicating it as an office. So whatever table, chair, AC, electricity, so there is no GST on electricity, whatever expenses I'm incurring for that room, can I take ITC? So both are linked questions. Now, in this second question of the participant, I'm presuming that you have not included that room as your additional place. If you have added in your GST registration showing that particular address as your additional place, I believe, sir, there will be no challenge at all. The challenge is only when I'm not including it as my additional place of registration. So now my query to everyone, we'll keep it simple. My office or one of my areas where I'm having that backend team, I have not taken registration. Will I be eligible to take ITC of expenses at that place? Yes. Anybody has any inputs?
Sir, Anuj is writing yes, allowed, and input can be used against any of the GST. No, sorry, sir.
No, no,
Yes,
it may
ITC
not
will
be.
be allowed. That was the earlier question. Yes, ITC will be allowed. Vijayji writes.
Okay, but sir, then let me tell you what is happening practically. Today, the officers are bluntly disallowing ITC on this ground. Why I've taken this question? Because this is a very big question, and I'm sure once the officer comes out of 2A, 3B mismatch, all these issues, these are the future bigger issues in ITC which we all are going to face. Already, we are having 3 cases on this particular lines that particular premises is unregistered. In fact, adding to this, this is also happening in e-way bill. I don't know whether you all have come across this in e-way bill. Let us say I'm sending goods at a place. I'm selling goods to, let us say, Priyanshi. But Priyanshi has asked me to dispatch the goods at a third place, which we call as bill to ship to. But that third place is not registered. It is neither registered with me. Obviously, I'm supplier by it should be registered with me. And it is not even registered with Priyanshi because it is her client's place. So let us say Priyanshi is a works contractor. She has taken a site somewhere where she wants to do some work. She wants the material to be unloaded at that site. So she has given me address of that site. So when I'm raising invoice on Priyanshi, I'm writing Priyanshi's registration as the bill to address, but I'm writing the site's address as the ship to address, which is correct. Now, when I'm dumping the goods at the site, and if my vehicle is intercepted in between, the officers are asking me to pay penalty because they are saying that the place where you are taking the goods is an unregistered place. And if it is unregistered, it means there is some, I don't know what is, how there will be tax evasion, but this is how they are claiming that if my goods are going to an unregistered place, they are asking me to pay penalty. Now, this is a different thing. It is not about ITC. It is about even asking me to pay penalty of the e-way bill that is 200% of tax. I don't understand how, but that is another issue. But just linking it with my issue will restrict our discussion to ITC point, will not transgress to the e-way bill point, but both are linked issues that my goods are coming to such office which I have not included in my additional place. Eligible or not eligible? Priyanshi, any
In the chat,
inputs?
it states that Section 16 does not state that goods and service has to be received in recipient's premise only.
Perfect. This is what is my input also. So my input is that wherever I'm receiving the goods, in fact, I'll link it with somebody else's reply also. Somebody else had earlier put this reply that some explanation you referred to in section 16.2, which says that where the goods are purchased on bill to ship to model, I am eligible to take credit because goods receiving at that third person's place would be deemed to be received by me. So it was an explanation relating to 16.2b. So I'm using that analogy also. And also the main point, again, I repeat that single sentence, which I've been repeating. 16.1 puts a condition per GSTIN or qua GSTIN. It has nothing to do with the place. So the moment I can prove that these goods are my goods, they have been received for my purpose, maybe at my employee's office, which was my earlier example of COVID and work from home, or maybe at such place like somebody's question that it is at your residence, which is used for your business, one of the rooms, or it is in my example in one of such offices, back office, which I have not included in registration. I believe the law has no challenge. Rather, the law, through these two, three inclusions, like that explanation in 16(2)(b), and by not making the requirement, as somebody just mentioned, that it should be received in my registered place, the law is also very clear that they are not putting this condition that the goods should be received in some registered premises. So far as I can establish the connection with me and that particular place, or not even place, between the goods and my business, that those goods are ultimately in the course or furtherance of my business, I believe the condition of the law is satisfied. But yes, this question is going to go a long way, because I'm sure the officers have got a new tool. They have got a new reason to challenge your ITC. Anyway, somehow they don't like you taking ITC, so they keep on working very hard to find out reasons how they can block your ITC. Whenever I go to take training sessions of officers, the first question that they will ask me, ki, Vishal, tell me where I can disallow the ITC. I said, sir, you should ask me the question otherwise, ki where the ITC is allowed. But they are asking me the question, Vishal, tell me ki where I can disallow the ITC. So see, this is how they are thinking. They are continuously reading the law with this intention. Like we all read the law to understand what does the law says. They are reading the law with the intention ki how I can tax someone or how I can disallow the ITC. So we have to be prepared for all these challenges. This question would go a very long way. My submission, as I already gave with the backing of various law pointers, that there is no requirement that it has to come at a registered place. Law has nowhere put this requirement. Now, another question which I put relating to this, relating to the same condition, when the law says ITC will be allowed to a registered person, I have put a question over here, when registered. Now, somebody I will ask me, Vishal, when registered means what? So I'll take an example. Let us say I am yet to cross 20 lakhs. So I have not taken registration. I am a chartered accountant in practice, yet to cross 20 lakhs. So I have not taken a registration. Now I want to install an AC in my office. So I contact Priyanshi, who is an AC dealer. I say that I want AC to be installed in my office. I call her today. Today is 9th of August. She says, sir, AC will be coming by 15th of August and I will install by 17th of August. I said, fine. So by 17th of August, she comes and installs the AC in my office. My turnover crosses 20 lakhs on 20th of August. So see the timeline. Today is 9th when I place the order. She said that by 15th she will get the AC in her business place, and then she will install it in my business place by 17th. So she did the installation by 17th of August. And the next stage is by 20th of August, I crossed the limit of 20 lakhs. So I got registered with effect from 20th of August. Now, in all this scenario, she gave me invoice initially without putting my registration number because I was not registered on 17th of August. But then once I got registration on 20th of August, I informed her, Yacha Priyan should do one thing. Anyways, you are yet to file your GSTR1 for August. Your GSTR1 for August will go in September. And I am registered. I have my GST number. So do one thing, take my registration and put my registration, give me an invoice with my registration and give me the ITC. Now the question is here, this point will come. When the law says a registered person will be eligible for ITC, the question is when registered. What do I mean by when registered? That is at the time when the goods or services are received, or at the time when the supplier is raising the invoice, or at the time when the supplier or the recipient is filing the returns. So in my case, in first, on the date of receiving goods, I was not registered. Assuming she has raised the invoice on the same day, I was not registered even on the date of raising the invoice. But by the time she is filing her GSTR1, which will come in the next month, I have got the registration, I've given her my registration number. Will I be eligible for ITC?
So in the chat box, Dhruvajyoti ji says, no, you're not eligible as during the time of supply, you were not registered.
Exactly. Now, this is the bottom line point, that I was not registered at the time of supply, but my question is the same. And in fact, this question I'm now changing with this particular input. What do you mean by you should be registered at the time of supply? What is that point? Ki, you said, na, ki you're correct. Ki at the time of supply, I was not registered. So what is that time of supply? Whether it is receiving goods, raising invoice, or returns. What is that time, sir? If you can explain.
Dhruvajyoti ji writes at the time of receiving GSTN. Sandeep ji writes at the time of receiving goods.
I didn't get this answer at the time of receiving GSTIN, because at the time of receiving GSTIN, my GSTIN is effective from 20th of August in my example.
So hence, they are not eligible for
Achha,
claim.
so according to him, so it is, I'm not eligible. Okay. But somebody said I'm eligible because somebody said at the time of receiving goods. Okay. So again, at the time of receiving goods, I'm not having my GST number. Now I'll change this example slightly, where you'll have 3 dates. Same, I've taken some service from Priyanshi. The services are received on 17th of August when I'm unregistered. I get registration from 20th of August. Now, in case of service, you all know that Priyanshi has 30 days to raise her invoice. The time of supply allows Priyanshi to raise invoice up to 30 days. So she gave me the service on 17th, but she is raising invoice in September within the 30 days timeline. So she has raised invoice on 10th of September, which is well within the requirement of the law. Section 31, which deals with invoice, says that in case of services, you can raise invoice up to 30 days after the services provided. So she provided the service on 17th of August, but she raised the invoice on 10th of September. I got registration on 20th of August.
So,
Now,
sir,
the date when she's raising invoice, I have my number. So I tell her, okay, Priyanshi, now when you're raising the invoice, I'm registered. Send me the invoice with my number. Yes, Priyanshi.
so sir, Anuj writes, sir, for this date of payment, invoice and goods should be considered.
So, sir, again, payment again, I'm assuming is post invoice. So at the time of receiving service, I'm not registered. At the time of invoice and at the time of payment, I'm registered. This is where the problem is. Now, if in all the dates are falling after my registration, there will be no challenge. Here, the problem is one of the dates is falling before registration. That is the date of receiving the service is before my registration. But date of invoice and date of payment is after me getting registered. So what will be considered?
So in the chat box, Manishi says condition of claiming ITC, both invoice and service should be considered. Sandeepji writes not eligible as service is completed before taking the registration.
Okay. Yes. Any other views before I give my final understanding? Any views there further?
No, sir. That's
okay, great. Now see, I first give that legal view, what somebody said, I don't remember the name, that at the time of supply, I should be registered. So I also concur to this. But the question is, what do you mean by supply? Here, I believe when I say that I should be registered at the time of supply, I'll simply say you are allowed ITC as per section 16. And if you go to section 16, one of the conditions is you should receive invoice. One of the conditions is you should receive the goods. I believe these 2 conditions should be followed or should be fulfilled. That is, when I'm having registration, these 2 things should have happened. If at the time of receiving goods or service, if I'm unregistered, I believe I will not be eligible to get the ITC, at least as per section 16. But let me inform you, even in that case, you'll get ITC as per section 18. What is section 18 saying? Section 18 is saying you are an unregistered person, you become registered. On the date of becoming registered, you have something in your stock. The problem only is that section 18 allows you only stock of inputs. So if that particular thing is held in your stock as stock of inputs, then on the basis of stock, by filing that some ITC 04 or some form, you are eligible to take the ITC. So if I link this condition with 18 condition, it means that on the date of receipt, I should be registered. If I'm not registered, that scenario is very well covered in section 18. So I believe at the time of receiving goods or service is the time when I should be registered. If I'm not registered at that time, I understand or I interpret this section as I will not be eligible to get the ITC. This is my understanding. It can be deliberated more, but I'll proceed because I have many interesting issues to be covered. Priyanshi, just let me know what time we have, because it is already 6:45, and ITC is such a thing we can go for hours.
So we can continue until probably 7:15, 7:20.
Okay, perfect. So that should be a good time. I'll be considering many things then. Fine. So let me take you to the next issue. Again, 16.1, same, you should be registered. Now, what is the challenge? Now, this is interesting. whether the conditions under 16, like goods and service should be received, invoice should be, all the eligibility conditions of section 16, they have to be fulfilled by whom? Whether by the ISD or by the branch or both. Now, why this question is coming? Very recently, in our interim budget, which was presented in February and it got enacted, the requirement of ISD is now made compulsory. And I think just 2 days back, a notification came which has said that this requirement is compulsory from 1st of April 2025. So from the next financial year, getting an ISD registration will be mandatory. Now, right now, I'm not going to discuss on what will be covered in ISD, what will be covered in cross charge, because again, that will be transgressing my topic. That will be, we can keep it for some other discussion. Now, let us take a simple example. We are in this ISD scenario where I am Mumbai head office. You all situated in different parts of Kolkata, Orissa, or Mumbai, or Delhi, or any southern part. You all are my branches. Just for example, everything is covered in one pan, where head office is in Mumbai, and all of you are my branches located across India. This head office has registered itself as ISD, and I receive an invoice which is for software. So what head office has done? Head office has purchased a software. This software will be used in all the branches. So all the branches would be having that software's application installed so that all the branches could be connected with the head office. This is the ERP which I have got developed from TCS. TCS has charged me 500 crores. The invoice has come in the name of ISD. Obviously, as per the ISD provisions, whether optional or now compulsory, in either case, I have to distribute the credit. Earlier it was optional, now it is compulsory. So even in the earlier scenario, whatever we are discussing is applicable. Anyways, from 1st of April, this is going to be compulsory. But let us say in optional scenario also, you registered yourself as ISD, like many of our industries have done, and you receive this invoice and you are distributing this credit to all the branches. So that is done. So head office Mumbai receives invoice of 500 crores software charges. Whatever GST component is there, it is distributing to all the branches. So I'm distributing to all of you all as per the ratio given in the ISD working. No challenge with the ratio. My question is, 16 has many conditions, 17 has many restrictions. So one of the condition is good service should be received, invoice should be received, invoice should be a valid tax invoice, supplier should have paid tax. Then you have that 180 days rule condition and all these things. My question is, this condition, who has to satisfy? Whether head office should satisfy this condition before distributing the credit. In other words, you should see the eligibility of ITC in the hands of head office, or you should see the eligibility of ITC in the hands of branch to whom you are distributing, or you should see the eligibility of ITC in the hands of both. Head office should also satisfy all the conditions of 16. Branches should also satisfy all the conditions of 16. I hope my question is clear, because this is an issue which will come up once this ISD becomes compulsory, once everybody starts doing ISD. Today, many are not doing. Whoever are doing may be facing this issue. We are already facing because of all our clients having ISD. In many of the audits, they have this particular point is a challenge. So I repeat my question. Invoice has come of software services at head office, which is ISD registered. We are distributing it to all our branches as per the ISD mechanism. Question is, when tomorrow eligibility question will arise, the satisfaction of section 16 will arise, whether it is in the hands of head office or whether it is in the hands of branches. Who has to satisfy these conditions?
So, Pardhaji states that HO has to fulfill all the conditions.
But then I think one biggest condition will not be satisfied, that is of receipt, because maybe all these services may be received at the branches. Head office is only receiving the invoice. There are many cases where head office is not doing anything. It is just an administrative office. So actually, let us say, I'll give you another example. Let us say stock taking has to be done. Now, stock taking has to be done of all the branches. But the head office receives one common bill as per their policy, and then it's distribute the ITC to all the branches. Now, there is no stock at the head office. So technically, no service is received by the head office. The services are received by the branches. So in this particular case, one of the basic condition itself is not satisfied.
So Anuji writes both ISD and branch should satisfy the conditions.
Anuji, then same point. But again, this will not be correct, because head office cannot satisfy the condition of receiving the service. Head office has not received the service. Same point. Question, na?
Right. This area is the most loose point in GST regime.
No, it is the most disastrous point, I'll say. And I really am not very happy with government making it compulsory. Anyways, there was a lot of confusion, or not confusion now. I think we are settled since last few years about ISD and cross charge. But now by making ISD compulsory, they are going to add a lot more problems, because in many of our cases we were settled. We had taken a policy decision at the company level, and we were either following ISD or cross charge or both. So it was now settled practice. Now this will get unsettled from next year, because now the law says you have to compulsorily do ISD. And now the challenge for us will be we have to now correctly classify what will fall in ISD and what will fall in cross charge. Presently, what we were doing, either we were doing all ISD or we were doing all cross charge. In very few cases of our clients, we were doing both. So our clients were also happy because they had multiple. Some clients are there who are having 200 plus units. That is, in every state they have many units. So dividing it to everyone is always a challenge. Doing every month is a very big challenge. Filing returns and all things is a big challenge. You all also know the pain of all this. But somehow we settled this in past few years. But now this will get unsettled, because now we'll have to compulsorily do ISC. And for remaining, we have to then by default do cross charge. So now by default, in many of our cases, we'll have to do both. And when we have to do both, the question will arise, what will fall in ISD and what will fall in cross charge, which is anyways a very big question. Now, this is the pertinent question. So yes, I concur to your view. It is strange, it is stupid, it is disastrous. To understand this, let me take you to the definitions first. Now I'm going by the new definitions which are brought in as per the budget. I'm not going by the old ones, because anyways the new will prevail. So what does the new definition says? Firstly, now who is input service distributor? It means the office of the supplier of goods or service are both fine. Very interesting what it says. It is not saying receive goods or service, because it may not happen. So who is ISD? They are saying who receives the tax invoice towards the receipt of input service. Now, interesting, nowhere the service is received by them. How it is proved? See. So if I read it in conjunction, forget about this between part, just read the bold parts. It says, who is input service distributor? It means the office which receives tax invoices towards the input services. And this is for or on behalf of the distinct person, which are referred in 25. I'll put simply, it means your branches. So who is ISD? It means your head office who has received the invoice, not the service, who has received the invoice. The invoice is for services, but it is doing this on behalf of its branches. It means the goods and services, not goods, sorry. The services have been actually received by the branches. Only then there will be ISD. Right? Now, interestingly, second. Now, if I go to section 20, just read the wordings. Huh? Then maybe you can get the answer yourself. What does the law say? These are all new amended sections. Any office of the supplier of goods, service, or both, so I'll call it as head office, that is the ISD, which receives tax invoices, again, not services, which receives only the invoices towards the receipt of services. Again, services are not received by them. It is towards the receipt of service. The receipt may be at the branches. Interesting. For or on behalf of the distinct person, very important, shall distribute the input tax credit in respect of such invoices. So 21 simply says that if you are ISD, you have received the invoice on behalf of your branches, what you have to simply do is you have to distribute the credit to your branches. Fine. Now comes the most interesting part. This is where you will be enthralled. What does Rule 39 says? It says an input service distributor, that is now your head office, जिसके बारे में हमने ऊपर बात किया, shall distribute input tax credit. How? In the manner subject to conditions, etc., etc. Just read the important part. What it has to distribute? It has to distribute input tax credit. What are the conditions? The input tax credit available for distribution in that month. Nowhere it is using the word eligible. If you read section 16, we have been using the word avail, eligible, entitled. But in entire input service distributor's definition or conditions or rule, it has nowhere used the word input service distributor is eligible for credit, entitled to credit, avail the credit. What it has said only in this particular point, that you have to distribute the credit where the credit is available for distribution. You have not availed. There is a difference between available and availed. You are not entitled. You are not eligible. It means, I believe somewhere, my interpretation I'll just share, the requirement of satisfying the eligibility conditions are majorly at the branch end, but few things have to be first checked at the head office end also. But I'll just counter this later. Firstly, the main invoice of the supplier has to be received at the head office, because that will be received at head office only. Branch will have the invoice of whom? Of the input service distributor. Second most important point, when you put the condition, the supplier should have uploaded in GSTR1 and it should reflect in your 2B. Again, this condition will apply to head office, because the supplier will upload GSTR1 by putting the ISD's GST number, and it will appear in the 2B of ISD. So these two conditions, I think, are the one which have to be satisfied by the ISD. After they satisfy this, the credit becomes available to the ISD in that month. Which month? In the month in which the supplier has uploaded that invoice in his GSTR1 and it appears in the 2B. Now, interestingly, there is no 2B for the ISD. It is 6, GSTR 6A something, right? So it appears in the GSTR 6A of that ISD. So like how we have 2A, 2B for for ISD, it is GSTR 6A. So this condition of 16 to AA, I believe that is the only condition. 16 to A and 16 to AA is the first condition are to be satisfied by the head office. All further conditions have to be satisfied by the branches. How? I have not covered the entire rules because it is very lengthy. But if you read the entire rules on ISD, interestingly, what it says, today, let us say I have received the invoice. I means the head office. I satisfy these two basic conditions. I receive the invoice from supplier. Supplier is uploaded in his GSTR1, reflected in my 6A. So I have taken the credit which is available to me, not eligible, available, and I have distributed to all of you. This particular invoice was on credit. So I have yet to make the payment. 180-day passes and I don't make the payment. Now we all know if the payment is not made, ITC has to be reversed. I hope you all know this. Now, this is where I'll repeat, only the first two conditions are applicable to head office. All further conditions are applicable to the branches. Means what? This 180 days, if it passes, the reversal has to be done by whom? The reversal has to be done by branches. Because anyways, the credit is not lying with the head office in the first place. In fact, I go a step further. You have the 17.5 blocking. Head office will not see anything about the 17.5 blocking. Head office, again, these rules, I have not taken the detailed rules because that is a different chapter. All these conditions or all these rules, if you read in detail, they say that the head office will transfer both credits, eligible also and ineligible also. So if there is any block credit which has come to ISD, it will also be first transferred by ISD. And then who will do the blocking and reversal? It will be done by the branch. Because of this, my interpretation is majorly all conditions of 16-17 conditions and restrictions are applicable at the branch end, not at the head office end. If you read the entire rule and you make a homogeneous construction of all these conditions and rules, you will find that the applicability of conditions and restrictions are at the branch end. This is my interpretation. Priyanshi, any inputs from anyone?
Sir, I have a question. So,
Please.
so
Don't
sir,
ask much difficult. Just
no,
ask.
no. So the due date is 13th of every month.
Yeah, for ISD.
Yeah. So,
Correct.
sir, now, I mean, we won't be able to know whether, that particular month's input is actually going to get reflected in the 2B itself. So by default, we have to carry plus 1 month. I mean,
Why? Supplier uploads by 11. By night
sir,
of
the
11.
2B is available on the 13th itself because you have the quarterly system also.
But see,
So,
quarterly is a challenge for everyone. Let us keep aside the quarterly suppliers. Let us talk about the monthly suppliers. So if you are a monthly supplier where you are uploading your returns in every month, right? GSTR1. When it will appear in my 6A?
okay, so we have to figure it out that way, and then accordingly we have to distribute
No,
the.
so see, you are supplier, na? You are raising invoice on me. Who am I? I am the head office.
You are the head office,
So
and you
your
have
invoice has to reflect in my 6A.
right.
And then whatever invoice I will raise on my branches, that has to reflect in their 2A or 2B. I think you are asking the second leg. That is
I'm
where
asking for the second leg, right? I'm not asking from the supplier's point of view.
correct. But tell me one thing. So both things are settled now. That is why in fact they have kept 2 days extra. Because when you are the supplier, You raise invoice on me. I am the head office. That is the ISD. You upload on 11th. Let us say on the last day, as many people do. Last day, last minute you upload, right? So, but you do it in time. So on the 11th, by midnight, before 12 o'clock, you upload your invoice. It appears in my 6A immediately from 12. It will appear.
Right.
Now I have 2 days, 12th and 13th, to check whether it is appearing in my 6A. If it is appearing by 13th, I will upload it in my GSTR 6. That is why 2 days extra is given. So that I can first check whether your invoice is appearing in my, then only it will be a credit which is available for distribution.
But sir, that volume will be humongous. I mean, if you look at like big corporation, it's
We
practically
are
not
facing that challenge. We
possible.
are facing that challenge. And then all those portal issues are there. You are saying you have uploaded, but it is not appearing, and there is only 2 days time. So what we do practically is we pass on the credit. See, anyways, it is a
Up
matter
until
of,
now, we were following cross charge, but you know, the day it became mandatory,
it
we
will
had,
become mandatory. It will be
yes.
mandatory from 1st April 25. They have notified 2 days before. See, budget has only proposed it, but budget, remember, anyways, it had come in the interim budget, that is the February budget. And 2 days back, there is a notification saying that it will be applicable from 1st of April 25. So you still have 6-8 months to revamp all your softwares or your suppliers accounting systems for doing that. But you can ask your question if you have.
No, sir. So we already, you know, had applied for the ISD. So now we have to face the consequences for, I mean,
Yes,
we
yes,
can't
yes.
take
ISD, but let me tell you, see, I'll just transgressing for a minute. Many people have started complaining that now GST has no scope for compliance. Let me tell you, compliance days are back in GST. ISD is going to be a very big compliance headache. Second very big thing, I don't know people are realizing this or not. GST has come up with so many new forms of mismatches, 1A, 1B, 1C, and they are yet to become because we have only come across, I think 1C is the last one or 1D, I don't remember, but they have made up to 1K. They have made it, they are yet to make it notified or bring it in the actual law. But the GSTN is working on all those forms because they have been instructed by the council to do that. So very soon in next 6 months to 1 year, like see, e-invoicing limit has been reduced. E-invoice linked with GSTR1, e-way bill linked with GSTR1. You make default anywhere, other thing gets blocked. Correct? So how are we looking at it? I believe if you are having a very good backend team, you should pitch for compliance work because now compliance is going to be becoming day by day difficult for small practitioners who are not having good backend team and even for the businessmen themselves because complying with all these things strictly within the timelines will be a huge challenge. Obviously, if you want to take that work as an assignment, you also should have that strong backend team and also most important, strong softwares. But I believe compliance days are back because of all these changes.
And so hence more litigation also.
Yeah, litigation is always going to be there, but I'm least interested in the compliance-based litigation. See, one is whatever till date we were facing are all compliance-based, and the one which are discussing right now, none of these are compliance-based. I have
Right.
not covered 2A, 3B mismatch or those because those are compliance-based litigation which will be wiped out by so many MNST schemes and circulars and all, like we saw for 2A, 3B mismatches, right? But the point is, we are yet to see real litigation, the law-based litigation that is yet to come. And yes, you are correct. Once compliance increases, the compliance-based litigation will follow. Great. Should we proceed? Any questions in the chat
So
box?
there's just one question. If we distribute ITCs to branches, do we need to prepare any invoice for such distribution?
Yeah. There is a specific invoice. Na? In fact, the branch will get the ITC again on the basis of invoice. What is that invoice? That is an invoice given by input service distributor. So there is a whole mechanism how input service distributor will distribute the invoice, distribute the credit to the branches for which input service distributor will raise their invoice, right?
So there's a question regarding a non-registration. Should I
Yeah,
say
please.
the assessee has purchased a big lot of good from a manufacturer, and the goods are kept at the place of the manufacturer since the assessee does not have any godown separately. The
Hmm.
assessee is selling the goods from the place of the manufacturer. The officer says that since that place is not registered as additional place, and he's levying penalty on such goods. So can he do so?
Again, see, there are two limbs to this. One, if you are selling the goods from that place, then I believe you should have taken registration. But if he's disallowing your ITC on that grounds, again, I come back to my previous answer. The place where I'm receiving the goods may not be registered for me. So I can still be eligible for ITC. That is the first point. But yes, he is correct according to me when he is levying penalty, because if you are going to sell goods from that other place, you can do so only if you have covered it in your registration or you have taken a separate registration for that. So technically, I believe the officer is correct if he is levying penalty for this. But yes, if he is asking you to reverse the ITC, I believe he's wrong, because we have already discussed on that. The place where the goods are received may not be registered for getting the ITC. This is my input on this. Fine. Now, interestingly, next question is, we have the condition in section 16.2, which says that you will be eligible for ITC only when you receive the goods or service. Now, the question is, what is this received? Whether it means physical receipt, answer is no. If you read the law along with other allied laws, like the General Clauses Act, what is the meaning of receipt? Okay, let us forget about General Clauses Act. Maybe everybody of you may not have read it. I'll give you an example of Contract Act. If you remember your CA foundation days, in Contract Act, we had the definition of offer and acceptance. And in that offer and acceptance, you had the concept of deemed offer, you had the concept of constructive acceptance, if you all remember those theoretical points. So what it means, that it is not necessary that every time I should give an express consent to show my acceptance of the contract. Even by keeping mum, I may give a consent to that particular contract and it would be considered as a deemed or a constructive acceptance. Same logic flows to the concept of receipt of goods or service. When I say goods should have been received, firstly, anyways, now place is not a condition. We have already discussed that. So it may not be received at my place. That is fine. But then the question comes, then how will you understand that whether it has been received by you or not? The answer is, you should see the constructive receipt. Now you'll ask me, Vishal, what is constructive receipt? The answer to this is, constructive receipt means where the goods come in your control. For example, I'll take a reference of some other decisions. These are not linked to ITC, but they will help you understand the concept of constructive receipt. What was this particular decision? In both these decisions, the point or ruling is that my goods are imported. I am registered, let us say, in Bengal, but my goods have come at Bombay port. Now, from Bombay port, I want to dispatch it directly to some customer. A big question came whether I'm required to get registered at Bombay port. Now, somebody else just asked this question a minute before, that if I'm supplying the goods from the manufacturer's premises, whether I need to get registered. Please, the ruling which I'm going to read over here says something different, but my answer for your previous question remains the same. If you are selling your goods from some other person's place, like in your question, some manufacturer's place, you have to get it registered. This is the answer. But here, when I read these two rulings, what it says, your goods have been received at Bombay port, and from Bombay port, instead of bringing to Bengal, you are directly dispatching, because you have to dispatch somewhere in Maharashtra only. Why will you bring to Bengal first and dispatch? So you have simply asked your CHA agent who has cleared your goods that, Baba, you do one thing, instead of transporting the goods to me at Kolkata, you directly transport it to a place in Maharashtra, let us say in Pune. Now, for this particular transaction, the question came up whether the importer needs to take registration at the port. The answer in all these rulings is no. What is the difference between the previous answer and this answer? This is one of cases. It may not happen regularly. It may happen one of the times. But in your previous question, you are regularly going to supply the goods from your manufacturer's place. This is what I got to interpret from the example given. So in that case, you have to compulsorily take registration over there. Whereas here, they have asked you need not take registration. Now, in this same example, we are discussing about constructive receipt. What is constructive receipt? I have not yet physically received the goods in my premises, neither I am having in my hands, but the goods are in my control. How they are in my control? Once they have been imported, I appointed the CHA agent, and on my behalf, the agent got the goods cleared from the custom authorities, and they are now in his physical control. This becomes a constructive or a deemed receipt for me, because agent is representing me. So when something comes in my agent's physical control, it comes in my deemed control or in my constructive receipt. So the moment the goods are received at the Bombay port, they are cleared by the custom house agent on my behalf. It becomes a constructive receipt, and either I can bring it to my premises if I want, or I can directly dispatch it somewhere else. How I can dispatch it? Because now it is in my control. So what is constructive receipt? Constructive receipt means the goods have come in your control. I think that will be the deciding test. Then question is whether e-way bill will play any relevance. I believe no, but today And definitely in future, let me inform you, many of your ITC will be disallowed on the sole ground that you did not have e-way bill for the receipt of goods, or the e-way bill was not having the address of your premises. So this would be a future challenge. They will be disallowing your ITC. Rather, they have already started disallowing on the basis that there was no e-way bill for the receipt of these goods. So they are linking receipt condition with e-way bill. You can always challenge that. Receipt and e-way bill are different. E-way bill is for movement. Receipt may not be in my hand. Still, it is a valid satisfaction of the condition, because I just mentioned receipt means constructive receipt. So they may be linking e-way bill with receipt, which they have already started, but you have to counter this because there is no such condition in the law, and I don't believe e-way bill is the proof of receipt.
So Dhrubajyoti ji has raised his hand.
Please, please.
Dhrubajyoti,
I think I have some points to mention here.
Please, sir.
Is it clear right now?
Very clear. Your voice is clear.
Okay. Now, I think since I've handled import of goods earlier in earlier companies, I know the procedure of importation of goods. I think till the time you are filing the bill of entry,
Yeah.
good sir, you have your CHA marked ready for taking delivery. You
Correct.
have your goods landed in the port, right? But there is a little, some days delays, some days gap between landing of the materials till the time you get the materials cleared from the port.
Correct.
Right. So till that time, probably it cannot be said at a consecutive basis.
Correct, sir. So that is what we discussed. The moment it comes in the control of your CHA, it will be receipt in your hands. Yes, sir.
No, just a minute. Consecutive receipt starts from the time you are filing the bill of entry. The moment you file the bill of entry, even even after filing the bill of entry, I mean, if there is any issue, you are not, because of various issues in the customs board, not able to take in custody of the material. That can happen. But filing of bill of entry is the point of division between the actual receipts and cost of receipts.
Fine, sir. We may have a differing view over here. So fine, your point is taken. I have a different view. I believe that when it will come in the custody of my CHA, it would be a constructive receipt, but it's okay, sir. Not a problem. Now, the next issue is when we apply this condition of receipt, at least for goods, there is some physicality. Question is, how do you identify this condition when it comes to service? Because again, section 16.2 is same for both. It is saying the goods or service should have been received. Now, when I have to satisfy the condition of receipt for service, what is the criteria for satisfying? Whether it is the date of when I receive the invoice for service, or the date when I consume the service, or the date when I make the payment for service. This is a big question mark and a big litigation point. When the services have been said to be received by me to satisfy the conditions of section 16.2. Here, I believe that when we are talking about receipt of services, first, there is no physicality which will show the movement. Second, there is no documentation to show the. Sorry? He's not talking to us.
Sir, I muted him.
Yeah. Sorry. So I was saying that when it comes to service, the challenge is there is no movement of service because there is no physicality. Second, there is no document evidencing the movement or receipt of service. So the question is, how do you identify that the service has been received or that condition is satisfied? I am taking this point as it is on the basis of time of supply provisions. So I'll check the time of supply provisions. The moment say the law says that this is the time of supply of service, I will take it as the time of receiving the service. So example, I'll give you an example. In case of construction, the construction is happening stage by stage, stage by stage, stage by stage. Now, what does the law says for time of supply for such services? It says the moment once event has happened, like let us say the plinth is completed and 10% payment is due from my side, that is the time of supply for construction service. So for the purpose of satisfying 16.2, I will treat the same time of supply as the condition of time of receiving, because physically know where the service is received. The builder is doing construction at his end. I am not physically receiving any service till the entire flat is complete or till the entire construction is complete. But for the purpose of satisfying this condition of 16(2), if I have to take the credit, I will be considering it as on the basis of time of supply. Now I link it with another question, same point. When there is continuous supply of service, I'll give you an example. Let us say you have taken an insurance policy. Not This is not example of continuous supply, but it is a service which has implication for a longer period of time. So let us say I have taken an insurance which covers me for 3 years, or I have taken an AMC contract which covers me for 3 years, and I am making an upfront payment because that is what is the requirement of the contract, that I need to make upfront payment of that particular service, and even the supplier is raising me upfront invoice. Now in this particular case, whether I am eligible to take ITC today of the entire service. Why this question comes? Because this AMC contract, this insurance contract is covering me for 3 years. So till 3 years, if anything happens, the person is going to reimburse me, or if something happens, they will come and repair me or replace the parts at my end. Now, in this particular case, when should I take the ITC? That is what will be considered as the receipt of service in this case. Now, first, taking a conservative view, like many times we suggest, that you do one thing, you proportionate the particular invoice over the time. So if it is over 3 years, you divide it simply by 3 and take 1/3, 1/3. But this poses another challenge. What is the challenge in taking 1/3 now? In the second and third year, there is no separate invoice. The entire invoice has come in the first year. So it has come in this month. Let us say in this August month, you have received invoice. So it is reflecting in 2B of this August. Now, you're taking only 1/3 out of that 2B. The question is, remaining 2/3, which you want to take in the second year 1/3 and in the third year 1/3, would be practically difficult, because in those years, it will nowhere be reflecting in your 2B. And the moment you take that 1/3, 1/3 in the next 2 years, you will immediately get the notice from the GST software itself stating that you have claimed excess ITC. This can be a practical
So
challenge.
we need
But
to wrap up in the next 5 minutes, sir.
no, we'll do that. This is my, you can say we can wrap up with this slide, not a problem. So the point is, in this case, though conservatively we advise, or we may advise our clients, that you do one thing to avoid any type of litigation, you take 1/3 in 3 years, but this will have a very big practical challenge, because practically it will be difficult in the second and the third year, because it will not match with your 2B. So you will directly get a system generated notice for that. Coming to the legal part, I believe, as I already mentioned, for me, the time of receiving service is the time of supply. If the time of supply has triggered for the whole service, even though physically I have not received it, I will be receiving over a period of time, I will take the full ITC in that month itself. So I am linking both the points. So first point is how to identify service. And with that, I have taken a linked example to explain. So my understanding, my submission for this is that for services, whatever is the time of supply prescribed, I will take that time of supply as the time of receiving service. So I think with this, I think I should conclude, but I'll keep it open for Q&A. So if there are any questions, we can take for next 2-3 minutes, and then we can close the session. Yes, Priyanshi, if there are any questions, you may just check and we can discuss.
So we've covered all the questions. Deepak ji is raising his hand, sir.
Deepak ji, please.
Good evening, sir.
Very good evening.
I'm audible.
You are very
And
audible, please.
yes, sir. It was a very nice session. At first,
Thank you.
very thanks, and it बहुत बढ़िया ये चीज का था, क्वेश्चन एंड आंसर्स वाला ये सेशन. So again, very thanks. Sir, मेरा question है, there are two companies X and Y controlled by the same management. Okay.
Okay.
Say suppose, sir, the company X, in name of whom sales bill was issued. Okay. The company X, in name of whom the sales bill was made, but mistakenly Y has availed the ITC. As because both company are controlled by the same management.
Maybe
and
they may have the same accounting office, the same accountant may be handling both.
Yes,
GST. No problem. Fine.
Yes, sir. And now later on, what happens? Just in after 15 days of taking ITC, X was merged in Y entity. X was merged in Y entity. So if X was correctly, if X ने correctly उसको avail कर लिया होता, तो भी
वो
वो
y के पास ही आता
ITC
था।
y के पास ही आता था। अभी सर कैसा है कि सर x में नोटिस सॉरी y में नोटिस इश्यू हुआ कि भाई आपके 2A में नहीं अपियर कर रहा है और ये मैटर तो अभी अपील स्टेज में है। सर इज देयर एनी प्रोविजन कि जिसमें y को ये रिलैक्सेशन मिल सके कि अल्टीमेट बोनाफाइड बेनिफिशियरी मैं ही हूं, x ने भी अगर उसको अवेल किया होता, इट इज जस्ट प्रोसीजरल लैप्स, तो इसका कहीं कोई बेनिफिट मिल सकता है? इज देयर एनी रिलीफ?
Okay, sir, answering this from two perspectives. First is from the GST perspective, not GST, the portal perspective. Sir, portal ही अपना जो हुआ है वो गलत हुआ है, क्योंकि पोर्टल के पॉइंट ऑफ व्यू से वो पहले GST X में क्लेम होके फिर X से Y को या तो बिल होके जाता था या वो ITC 02 फॉर्म से जाता था. So as per the GST and even the GST law, both, I believe it is wrong. But going by the principles of fairness, going by the principles of natural justice, of procedural lapses cannot override your substantive right. All those principles, if we apply, then in the courts, the court may agree with your provision that, see, ultimately, you have not done anything wrong in principle. Only procedurally and only as per the requirements of GST law, you have not done it correctly. So I believe that you may get a relief. I believe it is more 60% chance in favor, but that you will get only when the matter goes up to the Honorable High Court. It will not be before that, sir. Because up to tribunal also will follow the law strictly, and going by the law strictly, they will not go beyond the law. Only high courts and supreme courts have the rights to go beyond the law to interpret, which is the intent. Fine. So let me conclude this with my last closing remarks. So I generally share this with all participants. गौरवशाली था भूत, भविष्य भी महान है. गौरवशाली था भूत, भविष्य भी महान है. आप केवल इतना कीजिए, संभालिए जो वर्तमान. This applies to everything that we do, our profession, our life. So with these closing words, thank you very much. Thank you all the organizers, and thank you Priyanshi very much for being my co-faculty and making this session very interactive. And thank you very much participants for very live interaction, which I could not understand when we passed 2 hours, only when Priyanshi informed that we need to close. So thank you very much all.
Thank you so much, sir, for your excellent deliberation on this very intricate and crucial topic of ITC related issues. Your in-depth coverage of the subject has provided us with a very comprehensive understanding of the complexities that are involved, which are yet to be figured out by everyone. I would like to appreciate how you made the entire session so interactive with encouraging questions and discussions that have truly enhanced our learning experience. Your ability to break down these complex issues into such simple fragments has really made this session and not only informative but also highly engaging and enriching. Thank you so much, sir, for your time and effort. And before we close today's session, I thank all of you for being such an engaged and attentive audience. We look forward to seeing you all tomorrow for D5. Thank you so much.
Thank you all. Thank you. Bye-bye. Bye, Priyanshi.